taking energy that before they might have made carbon credits out of it and capturing it and making data centers in places like middle of the country in Oklahoma and places like this. So those themes are going to continue. Wealthy families are piling into the construction of data centers, whether the chips are NVIDIA or someone else. The data center construction isn't something that takes a few days. That will continue to create jobs. So data centers are still a good play. They're already started, they're already under contract, and they're not going to stop just because a tariff is imposed.
Carol, how about on the fixed income side? How are your clients playing fixed income these days? They can actually clip some pretty competitive coupons these days.
That's right. I think it's so hard to tell in fixed income because we really don't know yet what are going to be the effect of the tariffs on potential inflation and what Powell can or cannot do. Obviously, real estate to me is still a sector at risk. It's been holding on by its fingernails now for a few years. You know, extend and pretend. That might have to go on a bit longer now if we have a situation where inflation ticks up. If there are indeed tariffs imposed, that's going to make it very hard for Powell to lower the rates and therefore give some relief to real estate. So that's a sector I think people need to kind of watch out for. I don't think we're out of the woods yet on real estate. But you're right, in the short term as well, not a bad time to have a little bit of fixed income, but more on the shorter side because the swings on the long end are not worth it for most individuals. That's much more an institutional play.
What about safety plays? Like, what do you recommend to your clients that just need a portion of their investment portfolio that's safe, it's liquid? Like, is cash still the place?
Money markets and cash. Some people like gold. Bitcoin was looking exciting, but look at what happened with Ethereum. It just sort of collapsed now that the environment looks a little bit more risky. So yes, I think cash is still king. It's always been king. It will continue to be king. And US dollar cash is still the king because it is still the world's reserve currency. Other countries might try to take that position, but I don't think it's going to happen anytime soon. So sitting in cash is no shame in making some decent returns in your money market fund while the dust settles. Absolutely a straightforward play.
Carol, thank you so much for joining us. Carol Pepper, founder and CEO of Pepper International, joining us. Again, read headline crossing the Bloomberg terminal just earlier. Shane Baum says, good call with U.S. Trump led to some accords, citing a tweet from Shane Baum, translated from Spanish. We should also note that there's no confirmation from the White House yet, so we'll have further reporting on that coming up. In terms of tariffs, one industry that has particular exposure is the automobile industry. We checked in with Michael Dean. He covers the auto industry for Bloomberg Intelligence. He's based in London here. Hey, Michael, I know you and your team have done a lot of research on this in terms of the economic impacts on some of the largest auto manufacturers around the world. What have you found?
Yeah, so it's quite a big impact, as you've seen by some of the share price moves. So it's GM and Stellantis that have the biggest impact from their production in Mexico and Canada. Volkswagen has big production with the VW brand and Audi in Canada. And, you know, if they couldn't pass any of these tariffs on to consumers, they would be taking a massive hit to profitability this year.
What do you make, though? So if I'm a car company and I'm dealing with this volatility, right? Like we just get this headline from a tweet from Shane Baum at Mexico saying that we're going to be putting off a month and that we had a really good call. And then all of a sudden the S&P trims its decline to 1%. Like this is really big volatility for a sector that needs consistency. So how much does that play into CEO's decision-making and planning? Like how do you quantify that?
Yeah, so these tariffs have been looming for a couple of months now. So certainly as we approach full-year results for the automakers, they're going to be thinking of contingency plans. And say for Volkswagen, whether that's transforming more production into its US plants or exporting more product from Europe into the US before maybe tariffs have risen from the EU. So yeah, definitely lots of contingency plans, but we don't know how long these tariffs are going to be in place for. So that's a big issue in itself.
So, Michael, talk to us about these European auto companies that you follow. How do they typically, where do they like to shore their production? Is it like most other industries, the lowest possible cost locales?
Well, not actually for the Europeans. So like Mercedes and BMW, they've made the US their SUV production hub. That's because The US is a big consumer for SUVs and light trucks. So they actually produce with Volkswagen 700,000-800,000 units a year, a lot of which is exported from the US. So there is an argument for not actually putting tariffs on the EU automakers, but they have been impacted because they do have factories, Volkswagen in particular, and Stellantis in Mexico. So taking a 25% hit, as they will do tomorrow, this is a big ask of them.
So let's just say that everything goes into effect sort of as is, which obviously, as we mentioned, is brought into question. Do you have a number for how much my car that I want to buy, say, in 6 months will cost?
Yeah, so just take into account the average cost of a vehicle in the US is about $48,000. Remove the dealer margin on that, and you're talking about an increase, I think, between $7,500 and $10,000, which is going to be very difficult for a volume brand maker. It's going to be very difficult for the likes of Mercedes and BMW to compensate for. So in the end, they'd have to either shift production, import more vehicles from the EU, or just stop making the cars at all in Mexico.
Michael, just give us the 30 seconds on Stellantis. How do you in the marketplace kind of look at Stellantis these days?
Yeah, so Stellantis is difficult. They've had issues in the US because of their product lineup. They don't have a CEO at the moment, so they're trying to find a new one. They're getting hit on all sides. And because they have such significant exposure for Mexico and Canada, this is a real issue for the company. So they've got a huge amount of headwinds, which they're facing at the moment, not least finding a new CEO.
All right, we really appreciate your work. Thank you so much, Michael Dean, Bloomberg Intelligence, head of Global Autos Research. All right, let's just recap here some of the top headlines. So the president of Mexico, Claudia Sheinbaum, on X, has posted a post, I guess, that has been translated saying that Mexico will be strengthening its northern border with National Guard and that the U.S. is going to work on preventing arms trafficking and that Mexico and U.S. will be continuing to work on security. And all of that then means that Mexico says U.S. tariffs are delayed by 1 month. We don't yet have confirmation from the White House on that, but the markets are moving on it. We are well at the lows of the session for the S&P. You look at dollar MEX reversing some of those earlier gains, the same along with, say, some of the commodities like wheat and corn, as well as the Canadian loonie. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash is being brought to you by IBKR. Will the percentage of the U.S. experiencing drought conditions exceed 18% on February 18th, 2025? At IBKR forecast trader, the yes was recently at 35%. What's your take? Trade your prediction at ibkr.com/forecast. Let me start with the Mexican peso, because it has done a complete turnaround. It's up right now, up 0.2%. Well, maybe it was just a threat. We're coming off the worst levels of the session in the risk markets, equity markets right now. The Mexican president, Sheinbaum, tweeting that tariffs are delayed for a month. Here's the translated tweet, so we'll power through this. We had a good conversation with President Trump with great respect for our relationship and sovereignty. We reached a series of agreements. Mexico is going to reinforce the northern border. The United States committed to working to prevent the trafficking of high-powered weapons. Our teams will begin working today on two fronts, security and trade. And it's also worth noting, so far, we haven't had any confirmation from the White House. And I should also note that to the north, the Canadian Prime Minister, we were told there is a scheduled phone call with President Trump, between President Trump and the Canadian Prime Minister, Justin Trudeau, and that is scheduled around, I believe, 3 o'clock Eastern. So let's go through the markets right now. The S&P 500 off the worst levels of the session, still down, right at 6,000, down 0.7%. That is a 41-point drop right now. Dow Jones Industrial Average down only 106 points right now. That's a decline of 0.2%. The NASDAQ 100, which was taking the brunt of the declines earlier, shaping some of those earlier losses right now, down 0.8%. It is down 165 points right now. The Canadian loonie, that is still lower, down 0.2%. And the dollar, shaving some of the earlier gains right now, it is up about 0.4%. As for treasuries, we still see that curve flattening. The 2-year is up about 5 basis points, 4.24. The 10-year is right now down just 1 basis point, 4.52. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
Thanks so much, John Tucker. Alex Deal here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries worldwide. Latest headlines crossing right now. President Trump does confirm the delay of Mexico tariffs for 1 month. Sheinbaum also sent Trump Mexicans' anti-fentanyl public health campaign. Of course, President Sheinbaum is giving a press conference right now as well. So we will keep you updated on all of these headlines, but it looks like tariffs on Mexico will be delayed for 1 month. In the market, though, it is a crazy 24 hours in terms of price action and what all of the tariffs could mean. For example, I'm looking at WIRP, World Implied Rate Probability, and it looks like we're just pricing in like 42, 43 basis point of cuts now for the entire year. Ira Jersey, Bloomberg Intelligence U.S. Chief Market Interest Rate Strategist, joins us. Ira, do tariffs reduce Fed cuts?
I think they do, mainly because, at least near-term Fed cuts, because ultimately the first order effect is if you have tariffs, particularly of this kind of magnitude that we're talking about, goods prices will be somewhat higher. And as goods prices are higher, that means obviously inflation is going to be a little bit higher than we anticipated. Now, eventually, it's actually bad for growth, so bad for real growth, because people have to stop spending on things like services that have been growing like gangbusters. We've talked about this on the show many times before, that if you're spending less on services, spending more on goods because of the tariffs, now you wind up seeing real growth slow. And that's, so eventually maybe the Federal Reserve might cut interest rates, but I think that ends up being delayed at least for a little while as the economy adjusts to the new regime.
So, Ira, how do you think the Federal Reserve is going to be reacting, if at all, to, I guess, just the volatility associated with the tariff discussion?
Well, so I think that they're going to look through things like the equity market. Even if the equity market falls another few percent, the Fed's not going to panic. I think that there's a kind of a unwritten rule, or not rule, but unwritten observation that the equity market might be a little bit overvalued within the Fed. On the rate side of things, yes, you're seeing the yield curve flatten quite a bit, right? 6, 7, 8 basis points today, depending on the moment and the headline. But the short end of the rate market selling off a little bit, with 2-year yields higher and shorter term yields higher. That's an acknowledgement of the Federal Reserve maybe not cutting interest rates again anytime soon. And then the back end, when it rallies, that's more of a signal that that growth is going to be slower. Mm-hmm. And when you look at the distribution of that, you see things like tips are actually rallying because people are worried about inflation and inflation expectations going up because of the tariffs, but also the idea that real growth rates might be somewhat lower. So I think this is all very reasonable and kind of an expected market move based on the information that we've been receiving.
And just to reiterate, President Trump confirming on a post on Truth Social that negotiations with Mexico will occur during a 1-month pause. Mexican peso and dollar bonds leading some emerging market gains on this delay of U.S. tariffs. Ira, talking about the front end, I feel like that was the stable part of the market because that was the Fed, and the back end was really policy and growth and question marks. But now the front end is starting to move also. What's the level where we get buyers coming back in?
Yeah, I think you still need to go a little bit higher than here in terms of yield. So, maybe 430 would be an interesting level because that would start to imply that the Fed's next move would be an interest rate hike. And I think that the market's not going to kind of like the idea that the Fed's next move, at least anytime soon, it will be interest rate hikes. We have seen the distribution of market expectations for the end of this year shift quite dramatically, though, where you have basically even odds that the Fed's going to either cut more than 40 basis points or even hike interest rates, right? So you have this distribution that shifted to a more balanced outlook, I think, on growth, on Fed expectations, and just a path of policy based on the fact that we've had, until now anyway, a pretty resilient economy. And I think that certainly has surprised a lot of forecasters, including ourselves, in just how resilient, even amidst pretty dramatic increases in interest rates, how resilient the economy has been.
Ira, what's the Federal Reserve doing with its balance sheet these days, and what's kind of the plan going forward?
Yeah, it's still slowly running off its balance sheet, and we think that that'll end sometime or be announced sometime in the second quarter of this year, maybe as early as March. They'll hint at it. The minutes will be really interesting from last week's meeting because I'm sure it was discussed. The question is, how close are they to stopping the runoff of its balance sheet? There's a lot of wonky things that go on the liability side of the Fed's balance sheet. So we have to remember the Fed, like any financial institution, has a balance sheet with assets on one side and liabilities on the other. And the liability side of the balance sheet is what's important for liquidity, bank reserves, all the stuff that kind of goes in with the financial plumbing. And we're getting to a point where that's been kind of, I want to call it squishy, but we're reaching what we call the lowest comfortable level of reserves within $100 or $200 billion more runoff, and we could get there very quickly.
Squishy, we like squishy. 45 seconds. Treasury refunding announcement. Scott Bessent's first since becoming Treasury Secretary on Wednesday. What you looking for?
Yeah, well, today at 3 o'clock, we actually get the marketing borrowing need. So that's going to be the first step. So how much they need to raise in terms of money this quarter. And then we get on Wednesday, like you said, how they're going to actually fund those deficits. I don't think they're going to change very much this time, but we have to listen for what are changes coming forward because Bessent and President Trump have said that they want to extend the maturity of the debt. So that would mean more, 10s, 20s, and 30s instead of T-bills and 2-year notes.
I was taking notes and I'm getting all excited, and Paul's just rolling his eyes and
because nobody cares about that stuff, Ira, except Ira does. And I know if it's important, Ira will tell us if it's important.
I'm with you, Ira, though. I feel you. I back you up. Thanks a lot, Ira Jersey, Bloomberg Intelligence U.S. Chief Interest Rate Strategist, joining us there. We're going to continue the conversation with tariffs in just a moment. Rob Barnett is Bloomberg Intelligence Senior Energy and Commodities Analyst. We'll talk about the oil market, how it's going to raise Trump prices, really interesting pieces out about how much the refiners are going to wind up eating, how much the oil producers eat, and how much we, the consumers, eat when it comes to a gallon of gas. We will break that down for you. We are well off the lows of this market, guys. We're looking at the S&P now just down 0.8%. The NASDAQ off by about 1 percentage point. This is Bloomberg Intelligence. Happy Tariff Monday.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Lives. It's been all about tariffs today and the impacts upon the broader economy. One aspect of the economy that'll certainly see some action will be the global energy space. And for that, we check in with Rob Barnett. He's the Senior Energy and Commodities Analyst for Bloomberg Intelligence. And for those of you on YouTube, you will note that he continues to ignore my suggestion that he gets a proper haircut. But nonetheless, he is our expert on all things global energy. Rob, how do you kind of frame out kind of tariffs and impacts on global oil trades and how that's going to impact maybe what people pay at the pump?
Yeah, thanks, Paul. I'll consider a haircut in the future.
Don't listen to him.
You know, in terms of thinking about oil, you know, our general expectation is that if the tariffs really do go through, you know, you're kind of thinking about maybe 30 cents a gallon on prices at the pump. So, you know, you're going from $3.10 and change up to $3.40, assuming that consumers bear the full brunt of it. But the reality is probably there'll be a little bit of a split, right? So consumers might pay some of it. Some of the costs might be borne by the oil producers in Canada. And so when you think about Canadian crude, it already trades at a discount relative to West Texas Intermediate. It's about $16 a barrel cheaper to buy oil in Canada, and maybe this deepens that spread or widens that spread by several dollars a barrel. And, you know, that's bad news for the Canadian oil producers, you know, whether it's Suncor, Cenovus, Imperial Oil, or on down the line. Although I'm just looking at the screen right now, and most of them are in positive territory today, which suggests maybe the market doesn't believe tariffs will ever come into force.
So, Rob, I'm asking for a friend, that friend being John Tucker. He wanted to know why we need Canadian crude anyway and why we need Mexican crude. And I was saying it's heavy crude. It's a different grade. Can you, in a non-nerdy way, explain what that actually means to
So it's
JT?
easier to process. It's easier to refine.
It's just different. So a lot of the refiners are set up to process this heavy crude before we had the U.S. shale boom, which is a different type of crude. And to transfer it and to process lighter crude costs bazillions of dollars, and you don't get the product flexibility at the end of the day. It's real tough.
What does Wawa use?
I don't know, John Tucker. Would you know what Wawa uses?
Well, you know, at the end of the day, the global oil market would be quite constrained if Canada and Mexican oil weren't available in the market. So I think the idea that you can't lose the 4-ish million barrels per day of oil that are flowing from Canada into the United States, that would be an incredible shock. And you are right that the Canadian oil is heavier, and the refineries in the U.S. have been designed to basically take that heavier oil and pair it with the lighter types of crude that are produced in the Permian and other regions in the U.S. But and so it would be difficult for that heavier crude oil from Canada to find a home in other refineries. But it's sort of a sort of esoteric question in some sense, because Canada has pipelines that come down through the U.S. They have a little bit of export capacity to the West Coast, but they're kind of a captive market. So it's based, at least for the time being, it's either come to the U.S. or don't go anywhere.
Are there some workarounds here, Rob? I feel like, again, I watch Landman. I know about this oil and gas stuff. I mean, these guys are smart people down there in the oil patch. Are there some workarounds for kind of the North America, Mexican energy space?
The reality is, I think that, you know, if the tariffs come into force, they'll just have to, the cost of the tariff will just be borne by the market. Now, some of that oil that comes through the U.S. isn't even consumed in America and then goes abroad. So perhaps some of the global oil consumers bear some of that cost, and perhaps you see some shifting around where you try to take oil into the U.S. from regions that don't have tariffs, and you take the Canadian oil and move it elsewhere. But the reality is that's a difficult optimization. It'll take months, years, decades even. And so at the end of the day, Canadian oil will probably continue to flow through the U.S. and be processed in the U.S. for the foreseeable future, and the costs just get passed on to the ultimate buyer of the refined products.
This is what I was thinking about earlier today, too. It's like, if you have 10% tariffs and say that equates to $10, then also Canadian oil is going to have to fall $10 for you to buy it. Like, oils are very efficient. These are very efficient markets. They're going to clear. It's just a matter of what price they clear at, and then what the ramifications are for those producers. That's my Alex Blaine for the morning. Thanks, Rob. Always a pleasure. Great to see you. Don't cut your hair. Rob Barnett, Bloomberg Intelligence Senior Energy and Commodities Analyst, which is what's so interesting. It's not like you're going to have everything just landlocked. It's just you're going to see different flows, which just creates inefficiency in the market, and that comes with a lot of price disruptions.
Yeah. So, but again, I think it's one of the interesting things that we see, you know, throughout that whole energy supply chain, you know, who takes that cost increase and what
Yep.
will ultimately be for the consumer.
So
that'll be
JP
interesting.
Morgan said 20% for the consumer, but
Okay.
that's what you guys will
Okay.
take on. So we'll see. All right, for our listeners in
Again,
the U.S.
adding to the John Tucker, expense.
Disgruntled fund.
Yes.
For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM, channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now on a very volatile market Monday. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Monday, everybody. Headlines moving fast and furious. The president of Mexico and President Donald Trump having a call just within the last hour and are taking tariffs off the table for 1 month while they work on national security arrangements. That moving the market. If you take a look at the S&P now well off the lows of the session, just off by about 0.6%. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Tons of stuff happening. Want to get you caught up right now with John Tucker for Bloomberg Business Flash.
Yeah, the currency market, I'm going to start there because that kind of tells the whole story. The peso, what a turnaround there. Complete turnaround. Right now, it's up over 1%. This is the spot peso. The tariffs on Mexico being delayed after the phone call with the Mexican president, Donald Trump tweeting, "We agreed to immediately pause the anticipated tariffs for 1 month period, during which we'll have negotiations headed by the Secretary of State, Marco Rubio, Secretary of the Treasury, Scott Bessent, and Secretary of Commerce, Howard Lutnick, as well as high-level representatives of Mexico." I should point out that there was this call scheduled with the Canadian Prime Minister, Trudeau, sometime this afternoon as well.
3 p.m., isn't it? Or is it
3 p.m.
earlier?
That's what I heard earlier, 3
Time
p.m.
is malleable.
Anyway, earlier today, Kathy Jones of Charles Schwab, she reminded everybody the immediate impact of tariffs would be inflation.
Initially, you get the price impact of import goods going up in price. So your avocados and cars, probably, certainly energy prices, and we're seeing that reflected in the market.
Right now, the S&P 500 is down just 37 points. That's a decline of 0.6%. And right now, all the 11 major industry groups, before they were lower, right now we have 4 that are higher. So again, a bit of a turnaround there. The NASDAQ 100 down just 0.7%. And the Dow Jones Industrial Average 94 points lower. And quick look at the commodity space with the crude oil, since we were talking about that earlier. NYMEX crude, that is now lower, 72.48 a barrel, down just about 5 cents a barrel. And if you go to BOIL, that's BOIL, go on your Bloomberg terminal, I guess it's a play on what they do in refining. They just boil crude to get the stuff. Canada has 3 grades. I can't even pronounce these. WCS Hardisty, Sour Houston, and Sour Cushing. And most of those are down in price.
So I should point out, I was talking to the our Canadian Bureau about this.
Yeah.
These prices don't update till the end of the day for some reason.
So that was an exercise in futility on my part.
But they were quoted about an hour and a half ago at about -18 to -15. That was where the bid-ask spread was. So we're still in that range. So it's a safe bet. It's just not 100% accurate.
Boil go on your terminal. You look at it, it's just like, oh yeah, crude oil. No, they're like a gazillion grades.
I know,
of crude
isn't
oil.
it so fun?
Well, yeah, fun. We check the markets all day long right here on Bloomberg Radio and make it fun. I'm John Tucker. Back to Paul and Alex.
He mocks me.
I'm not mocking you.
It is really cool.
Oh, there is a
Anyways.
thing, B oil. There you go, boil.
Or it's really boil.
Boil.
You know,
Yep.
you could say
Yeah, I got you.
oil.
I got you.
Yeah,
I got
fair
you.
enough. All right, thanks a lot, JT. Alex Steele alongside Paul Sweeney, Bloomberg Intelligence Radio. Okay, let's get you caught up on more things happening in the market. If we sort of dig behind and look at some of the sectors, Isabel Lee is back with us, Bloomberg Cross Asset Reporter. All right, so a lot has happened since we talked to you in the last hour. What are you looking at now?
A lot has happened. It's like my inbox has never stopped moving, but I'm looking at alcohol companies or booze stocks. Can I say that on the show?
Sure.
We're looking at Constellation Brands. It's down by around 2%. Also, Brown-Forman. So Canada's responding with its own measure, and that's pulling American booze from its shelves. We have the Liquor Control Board of Ontario saying it will really remove all alcohol from its government-run liquor store shelves starting Tuesday. This also made me think they have government-run liquor stores. I didn't know that.
Yeah, it's not a good thing.
Yes.
Wait,
Pennsylvania has those. Pennsylvania has. I mean, the government-run liquor stores are the worst.
Wait, how is that a thing?
Why are they?
Well, the state of Pennsylvania has them. I mean, it's a government running this thing. So you walk into it's like walking into an East German
No, it's like running into the
supermarket.
post office but selling alcohol.
Yes, exactly.
That's
There you go.
probably
That's the right way to
And
do it.
in New York, where we are, you in a liquor store doesn't sell beer; it sells wine and other.
Well, that was one of the
spirits.
greatest things
Right.
I learned as a high school student coming in on the bus. And you
Underage.
could buy beer on any bodega at any corner, and nobody cared.
And
It
Zima.
was a beautiful thing.
Zima. Anyone remember Zimas?
Oh, man, that's bad.
We're
good
dating
times.
yourself.
Yes.
Zimas, baby. Isabel's like, what? All right, what else are you looking at?
Crypto link stocks, they're getting hit. We have Coinbase, which is trading really lower by around 2%. MSTR is flat, so that's interesting, but they did stop buying Bitcoin after buying for 12 straight weeks. But I asked an analyst why crypto stocks are edging lower, and they said investors are fleeing risk assets a little more quickly than they should. In fact, a leverage ETF tracking Ether is down around 46%. I think everyone's just trying to make sense of the market, but I think there's just some mild
Well,
panic.
Bitcoin,
perhaps.
I mean, early this morning during surveillance, it was at $95,000 per token. We closed last week at $105,000 per token. So got down to as low as $91,000 per token this trading session. And here we are at just under $99,000 per token. So if you want to trade something with some volatility, trade some Bitcoin.
I know, but
No,
it's
thanks.
still hard to believe that. No, thanks. We were 16,000 just last year. Can you believe?
Absolutely.
No, I really can't, actually.
Yeah.
What else are you looking at?
The last is industrial stocks. We have GM edging lower, Ford also edging lower, and as we know that industrials have a wide exposure to the global supply chain, and they're getting hit is really not a surprise. We have automakers and their suppliers, transport companies. They move goods around, and this is going to be a hit for them. GM, of course, has the heaviest exposure to Mexico and Canada among major U.S. manufacturers. So that's going to be something. But I just learned earlier that the subway might also be affected.
That was JT.
Yes.
Bombardier
Yes.
made many of these subway cars. I think they still do. It's Kawasaki is making the really advanced subway cars for the New York City transit system.
Yeah, my fun fact for the day.
All I know is people say the subway's gotten so much worse. I've been riding the subway every day for 45 years. It's the exact same. The only difference is it's all now air conditioned. That's it.
They're changing the seat color, though.
Yeah.
I mean, once you rode them in the 80s, I feel like.
Yes.
Back then, you guys wouldn't, well, some of you wouldn't know it. Back then, it was all graffiti in the subways.
yeah.
It
I
was
remember
like
that.
100%. They
riding
didn't even
in
bother.
a fun house on wheels.
Right.
Oh, yeah, it was not okay.
Yeah.
It was a scary place. All right, Isabel, thanks a lot. Isabel Lee, Bloomberg Cross Asset Reporter, joining us. All right, let's get back to the policy that's coming out of D.C. fast and furious. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. Okay, so if we get this news out of Mexico that Trump and Sheinbaum spoke and they're going to delay tariffs by a month while they work out other stuff, does this mean that we know why tariffs are being put? They're being put as a negotiating tactic, full stop. Is that now correct?
So I certainly think you can think about it from President Trump's point of view in terms of his goals. Obviously when he's talking about, our trade imbalance or our trade relationship with Canada and Mexico, he's mentioned three things in his Truth Social posts: fentanyl, border security, and the economy. But from the Canadian and Mexican perspective, it's much easier for them to go to President Trump and say, look, we'll do something on fentanyl and border security today. We could take a longer-term approach to the economic imbalance. That's certainly something that President Trump still wants. But from a negotiation perspective, I'm all surprised by this because it was what they could give President Trump in the short term. And we'll see what this meeting with Justin Trudeau today at 3 p.m., maybe Canada has a very similar proposition for the president.
So, I mean, I'm not even sure where to go here, but I guess as you kind of phrased it there, Nathan. This is a president that likes to negotiate, he's transactional. And it seems like if the counterparts are equally transactional, that maybe you could avoid a wider trade war. Is that kind of the expectation for the folks down in D.C.?
Yeah, so if you're part of the bull case, I think, in terms of that, President Trump is a negotiator and so forth, this is fitting into that narrative. I mean, obviously, you do have to prepare for tariffs because we do think tariffs are coming, but it just really depends on the sectors and also the broad impact of those tariffs. So let's just say that if Justin Trudeau, the Prime Minister of Canada, and President Trump make a deal today at 3 o'clock, and it follows the same timeline as Mexico, you get 1 month, President Trump is eventually going to come back and say, okay, well, let's talk about those trade imbalances. Let's talk about, in his Truth Social posts, about making Canada the 51st state. But, again, it's about extracting concessions. So what do we have to do for us in the market side? You certainly have to prepare for it. But also at the end of the game, it's very difficult to call because it's just one man's decision. And so we're just going to have to stay tuned and see what happens.
All right, so that's a great point. Stay tuned. What are you staying tuned for? Like, what are going to be the key phrases, the key words, the key pressers that you're going to be watching out for to tell you what the reality is going to be?
So I'm actually looking for whether or not Canada and Mexico fall through, or at least threaten to fall through, in terms of their export taxes. For example, potash. Not something many people talk about, but 90% of potash in the United States, which is very important for our fertilizer industry, comes from Canada. So if Canada wanted to, put on economic pain on a certain aspect of the American system, and especially a system that has voted for President Trump, I certainly want to look for something like that. Because for me to see the changing of the guard, or at least pressure on the president, I have to see it coming from the trade associations here in Washington. Not the big ones like the U.S. Chamber, but smaller ones like the National Association of Manufacturers, or the fertilizer, or the farmers. They're the ones that can put pressure on their allies on Capitol Hill to go to the White House and say, President Trump, you need to step back. So retaliatory tariffs is not something we talk about here much in the United States in this context, but that's really what I want to see if President Trump eventually would move away from these threats.
How about China, Nathan? I mean, we have, obviously generally very good relationships with Canada and Mexico, and presumably that helps in some negotiations like we saw with Mexico this morning. How about China? What's the feeling within the Beltway about how the U.S. may approach China?
Yeah, that's a great question, because a lot of the airtime right now, and certainly a lot of time in Washington, is spent on this Canada and Mexico relationship. But it should also be said that China received a 10% increase in tariffs as well. Now, we saw the response from the Chinese government that was more muted in particular. There wasn't any retaliatory tariffs at this point, at least. But I think that's certainly going to be part of a broader discussion. I think the folks here in Washington feel that when it comes to the U.S.-China relationship, they can at least take a breath. Things aren't going to be moving at lightning speed like they are in North America. There can be a little bit slower aspect towards those negotiations. But again, this is certainly coming. And don't be, the European Union, they're most likely next as well. I mean, President Trump has a lot of areas around the world that he wants to move into in terms of tariffs. Canada and Mexico and China just happen to be the first one on his list.
But if we're learning anything from the market action in relation to these headlines, it's that don't trust your first reaction. I mean, you're just looking at it. If you look at the S&P mini futures market that takes into account yesterday, this morning, and then now today trading, it's a whole different world. So how should a market participant think about this?
Yeah, so there's a lot of sentiment right now, and I agree with this sentiment that, in terms of these threats, we're beginning to see that it's just the same playbook of that transactional president, that he's willing to negotiate. It's obviously difficult for those of us in the markets to try and figure out what President Trump wants from those negotiations, but I think anytime you see one of these tariff threats / opportunities that come up, always just keep in mind that there is going to be a negotiation that takes place. Whether President Trump is talking about fentanyl and border security, those are things that the Canadian and Mexican governments can easily control, like Mexico's example of sending 10,000 troops to the border. If President Trump's #1 demand is an economic imbalance, like with the European Union in terms of increased share of GDP spending for its defense, that's a longer-term thing that the European governments would have to put in place. So I would just say, what is President Trump's #1 goal here? What can the other countries give in exchange, and can there be a negotiation time frame that's long enough to not spook the markets?
Well, tariffs certainly have the market's attention today, but tomorrow is another day. What, from a policy perspective, are you and folks in D.C. kind of looking towards this Congress, this administration to move forward on? What are the important ones coming up?
Yeah, so this week, obviously, we have confirmation hearings. I mean, I think most people think are going to get through. Tulsi Gabbard, I think, is the one that if she were not to get through, I wouldn't be surprised by that. You know, Jameson Greer is the U.S. trade representative. His confirmation hearing is on Thursday. Certainly important because he's going to be one of the most important voices in this administration towards tariffs. So a lot of questions may be asked. Hey, why would, we do this if potash and those farmers are going to be harmed? But I would also point out that the House Budget Committee is trying to come up with their reconciliation blueprint about this is the instructions for this major multi-trillion-dollar tax extension bill. And if they can't get it done, that serves our narrative that this is going to take a lot of time to work out. And if you lose any votes, and for example, the Republican Study Committee has already said they're not going to support anything that doesn't decrease the deficit, well, how do you include things like no taxes on tips without decreasing the deficit? Right. It's an extremely difficult question. And so I think we're going to be looking to see what those negotiations take place as well.
Can we just switch gears for a second and talk about the Elon Musk and the government and what we've seen from him and Doge in the last 24 hours?
Yeah, so obviously, we've seen reports over the weekend that the Doge Committee is in Treasury, accessing Treasury payment systems. This is with the idea that eventually they could cut off payments in wake of the federal freeze executive order that was then rescinded. And this is an idea about impoundment. And I think this is something that's coming to the courts. And even if you listen to Elon Musk last night on his Twitter Spaces or his X Spaces, he even said that he may need the court's support in this idea of impoundment. Let's just say that Congress decides that if they're going to give $100 million to the Department of Education, President Trump could just come back and say, nah, I'm not going to pay for it. But somebody is eventually going to sue over that. That will eventually get to the Supreme Court, and there are already laws put in place about impoundment. So it's sort of unclear, does the president have the ability to say, we're not going to spend this money? But look, if from Elon Musk's perspective, there's a lot of regulatory red tape, there's a lot of bloat in the U.S. government, we should certainly try, and it looks like they're starting with the USAID first.
What's the feeling in D.C. about Doge here? Is this a credible, I don't know, effort, if you will, organization, if you will? Will actual change happen?
So I think if you talk about like the internal structures of the U.S. government and specifically within the executive branch, so agencies like the USAID, President Trump and the Doge Committee can do a lot of work in terms of restructuring it and also going back to that impoundment fight that I just mentioned, shrinking it. I think you have some Republicans who are completely on board with that idea. You have also some Republicans who are sort of uneasy about the idea that the White House would then have the power to just take back this spending. Because look, eventually we will get a Democratic president back, and when a Democratic president comes back, he or she may be able to say, well, you know what, I'm not going to spend these policy goals that Congress has implemented as well. So I think there's some unease amongst the Republican Party that he's doing this, but also he's supporting the narrative that there is a lot of bloat in the federal government. And so I think it's just one of those, again, stay tuned and see what happens over the next few months.
All right, Nathan Dean, thank you so much. We appreciate that. Stay tuned. Every day is a new day in this news flow. We're used to this. We've been here before. Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence, joining us here talking about some tariffs. Again, it seems to be a fluid situation, judging by the conversation that the president had with the president of Mexico, which led to a delay of a month in some of those potential tariffs on Mexico. Presumably, there is a call scheduled with the Prime Minister of Canada.
Justin Trudeau, yep.
Justin Trudeau and President Trump. That's what we know for this afternoon at some point, and we'll see what comes out of those discussions. So again, we started the day on tariffs, and we'll stay there. The markets are bouncing off of their lows. The S&P sitting right at 6,000. That's off 0.6%. The Nasdaq's off 1%. It was off 2.5% earlier this morning. So bouncing off of the lows. Bitcoin was negative on the day. It's now up 1.5%, just 98,500. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. And we are being brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. The offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. In the S&P 500, 5 of the 11 major industry groups right now, they're higher. And the Mexican peso is up now. It is up just over 1%. This is a turnaround after the Trump administration said it's going to delay tariffs with Mexico for 1 month. So risk assets off their lows of the session. The S&P 500 down 31 points. That is down just 0.5% right now. Above 6,000, 6,009 for the index. The Dow Jones Industrial Average 36 points lower. And right now, the NASDAQ 100 down 124 points. That is down just about 0.6%. The leader of Canada's most populous province of Ontario said he's ripping up a contract with Elon Musk's Starlink internet services. This is in response to sweeping tariffs on Canada. The Ontario Premier also banning American companies from provincial contracts. But again, as we told you earlier, a call here is set for 3 o'clock this afternoon with the Canadian Prime Minister and Donald Trump. So who knows what's going to come out of that. Again, the earlier talk between President Trump and the Mexican president resulted in this delay of a month for the Mexican tariffs to take place. So keep it right here to Bloomberg Radio and Bloomberg TV as well for any updates on the tariff situation. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast Live, and that's where you will find us. Looking at the yield curve here, I've got the 2-year Treasury up 2 basis points, 4.22. I've got the 10-year down about almost 4 basis points, sitting at 4.5% on your 10-year, so a little bit of a flattening of the yield curve. The story today for global markets, global Wall Street, are these tariffs and the economic impacts that they may or may not have. Brian Whalen joins us. He's a chief investment officer and the generalist portfolio manager at TCW in Los Angeles. Hey, Brian, I know you and your team, you think kind of about global markets here. How do you guys think about kind of just tariffs in general? We're not really sure what degree they'll be imposed, for how long. How do you guys factor that into your calculus?
Yeah, it's hard. What a morning, huh?
Yeah.
Can you believe DeepSeek was just a week ago?
Right,
Feels like
exactly.
Look, I think the term we've been using around here, we're using the term fat tails, which is just kind of a reflection of, like, in a traditional investing environment, you've got your base case scenario. Maybe you got a 70% probability assigned to it, and then you got your 2 other options. You got 15% to the downside, 15% the other way. I mean, with regards to this new administration and the volatility, fat tails for us means we still have our base case, but there's a lower probability on that, and then we've got maybe something like a 50 in the middle, and then 25 we have this U.S. exceptionalism, high growth, low inflation on the other side. Maybe a lot of this tariffs, for instance, cause a pull down on both domestic and international growth, and it upends the job market, and maybe we have a recession. And so for us as portfolio managers, what we think about at TCW is, like, you still got to construct around your base case, but in an environment, particularly one where it's not that expensive to buy optionality. Volatility is still low, at least the priced one. You try to do things that help your portfolio either not lose so much if it goes one way, or maybe even gain if it goes another. And that's kind of the things we've been doing in the last couple of months, have to do about putting things in place in the portfolio that actually help, even if our base case isn't realized.
So, Brian, why is volatility, and I'm just looking at the MOVE Index, which is the JP Morgan Volatility Index, why is it low?
Well, a lot of that, I think, what's transpired, from the Fed, particularly once we got into the late months of 2024, and even what you just heard him say, Powell say last week, which is basically, we're good, which is, we kind of like where, the Fed funds is right now. We still think it's restrictive, but given all the other volatility going on, particularly tariffs, for instance, we're going to kind of sit here and kind of watch things. So what that's done is it's anchored. It's provided stability to the front end of the yield curve, and particularly somewhere between like 2 years and 5 years. It's anchored there, and it's left the rest of the curve, the 10-year and the 30-year, to kind of move up and down. And so, you know, with the fact that the Fed has moved into this kind of pause/easing mode, it's led to the implied volatility in the rates market to be relatively low. However, what I would say is, and we can get back to tariffs and other things going on in the markets, like that's conditional upon risk assets performing well. And if we get moves in risk assets, particularly to the downside, you could see that implied vol in the rates market go away and rates move abruptly if we get downdrafts in equity markets or widening in credit spreads.
So talk about credit here, Brian. How much credit risk are you guys taking these days? When you look at a 2-year treasury, you're still getting 4.25%. How much above and beyond that do you want to take in terms of credit risk?
You know, one of our favorite trades right now is not to have that on. It's not to take credit risk. You know, I think you know, you're being, you know, fairly well compensated to take no credit risk, which is effectively, you know, treasuries. And, you know, you've never been paid less. That's hard to believe given, you know, DeepSeek a week ago and tariff volatility over the last 24 hours and, you know, Trump's being Trump, and all of a sudden, you know, we spent 24 hours cranking through the models to determine how these tariffs are going to impact inflation and growth, and all of a sudden we get a big, you know, just kidding, you know, and that creates vol. So you've never actually gotten paid less to take credit risk right now. You know, to get paid, you know, to take exposure to kind of average high quality companies right now, it's about extra 0.75% of yield over treasuries, and that's never been that low. So look, you win by buying that right now if there is no vol. You know, if the next 6 to 12 months it's very low vol and you don't get uncertainty and markets don't move around, and that's the carry trade. You win. You lose if we do get bouts of vol and things bounce up and down, particularly wider. Because when you get in such a little premium of compensation for risk, when spreads go from 75 to maybe just 100 basis points, 1% over treasuries, that's going to impact the value of your holdings, and you'll be wishing you saved your dry powder. You'll be wishing you bought treasuries instead of corporate bonds because you'd wish you could buy them at cheaper levels.
All right. We really appreciate it. You're awesome. Brian Whalen, CIO and Generalist Portfolio Manager at TCW's Fixed Income Group. Great perspective on the fixed income market. Let's get you perspective now on the equity market. Gina Martin-Adams is Bloomberg Intelligence Chief Equity Strategist and joins us now. Woohoo. Okay, so this is a day. Gina, you take a look at the volatility in the equity market and just the whippy action that we've seen based on headlines. How are you recommending to your clients that they manage that risk?
Well, look, in the equity market, you always have the risk of a drawdown based on a policy change. This is one of the 5 key risks that we identified for stocks coming into this year, that we would have not only a monetary policy shift emerge, but also a fiscal policy shift emerge, and tariffs are a key part of that general fiscal policy stance. So the way that we're monitoring it is predominantly through margins. Typically, when you see tariffs implemented, and this was definitely the case in 2018, we started to see analyst forecasts for operating margins capitulate to the likelihood that companies were going to have to pay the cost of those tariffs. So margins are going to be very, very key to driving performance. I mean, look, we, in a lot of ways, got somewhat lucky because our more sort of quantitative methodology that really doesn't even include any policy metrics already told us that financials were some of the best positioned companies coming into this year. Financials escaped tariffs altogether. We're not going to see financials pay the cost of tariffs. So that's very, very helpful. Healthcare is also toward the top of our sector rotation methodology, which I think there's a lot of nervousness on the aspect of the investor with respect to where will healthcare spending ultimately change. How will this president address Medicare, Medicaid, and Obamacare specifically? But healthcare so far is also relatively sheltered. We'll see when we get some tariffs implemented potentially on the European Union. That could be an area of risk for healthcare. But nonetheless, I think that there are places to hide in the equity market. Financials universally is one of those places across countries because they don't export products into a country. I think the trouble right now is really also just perspective, and that is the companies pay the cost of tariffs, which means the U.S. companies are most at risk of this implementation. So we need to work hard to identify who the U.S. companies are that are likely to pay the tariffs. Clearly, with the recent news on Mexico, that relieves a lot of pressure on the transportation industry, which is the primary source of concern in Mexico. But there's still a lot of mixed news on Canada. And that could be very consequential for what happens with energy costs largely. So there are areas of supreme risk and areas of sort of shelter that you can seek within the equity markets, and that's what we've been focused on.
What did we see from the last Trump tariff cycle from his first presidency about the ability of companies to really maybe just eat all that price increase and impact the margin directly versus passing some or all of that along to consumers? What do we see?
So 2018, you might recall, was a rough year. Right? We started the year off with Volmageddon in January, and that just really kicked everything off. And we had a 20% correction in stocks in the second half of that year. At least half of the margin pressure that emerged on stocks in the latter part of 2018 was directly attributed to tariffs. It's difficult to say it was all of it because we also coincidentally had a tech crisis in 2018. I mean, there are so many parallels for 2025 to be found in 2018. It's a little bit terrifying. Nonetheless, in 2018, when we saw the tariffs implemented, specifically targeted at China, but also in that point in time, Mexico was a key recipient of tariff activities by the Trump administration. We did see operating margins as the single best leading indicator for stocks. And so operating margins for industrials, materials, tech, of course, though that's not directly necessarily attributed to tariffs, but tech also saw operating margin pressure emerge. So we can harken back to 2018 as a proxy. It's obviously not exactly the same. Tariffs at that point were quite minimal compared to tariffs implemented today. So the notion that this could be more broad-based is certainly in play, though also this was much more telegraphed, and I think retaliatory measures by our partners are also much more in play this time around. So we'll see where this goes, but it is very much day-to-day, not exactly like 2018, but we can certainly learn lessons from 2018.
What are you watching next? I know that's a really dumb question, but like, what's a headline that's going to pique your interest and say, okay, this could be a game changer?
Oh, God, there's a laundry list. I think the most important indicator right now is a combination of margins and the dollar. We've talked a lot about the dollar since December as an increasing risk for equities. So when we start to see companies acknowledge dollar risk, which probably doesn't come to the second quarter, that's going to be important. If we keep seeing the dollar accelerate, we get to 15% from its lows in September, 20%, God forbid 25%, typically that indicates a pretty big recession emerging in earnings. So the dollar is very, very important. Analyst forecasts for operating margins, also very, very important. One of the indicators that we're watching is the CPI versus PPI measures. This is one of the things that I think in January was most risky that emerged as the market just sort of reacted to the CPI report, in our opinion, very bizarrely, very strongly, ignoring what's going on in PPI. The combination of the two is a margin risk. I think you can watch the headlines on tariffs, but don't get too attached
to
the headlines on tariffs because they change very, very closely. So I would be highly reticent to position around tariffs specifically.
All right, Gina, thank you so much. We appreciate it. As always, Gina Martin Adams, Chief Equity Strategist for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. S&P 500 sitting right at 6,000, down 36.6%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, 8 of the 11 major industry groups in the S&P 500 are higher. A turnaround from the earlier sell-off. And then the Mexican peso, that tells a lot of the story. It is up over 1%. This after we learned the Trump administration delaying tariffs on Mexico for a month. And then this afternoon, there's a call between the White House and the Canadian Prime Minister, Justin Trudeau. That's around 3 o'clock, so who knows what's going to happen there. Right now, the S&P 500 just 33 points lower. That is down 0.6%. Over 6,000, 6,007 right now. Dow Jones Industrial Average 35 points lower, and the NASDAQ 100, again, recovering some of the earlier losses there, still down 154 points. That is down 0.7%. The VIX, the volatility index, Wall Street's fear gauge, still somewhat elevated at just below 18 right now. Tony Crescenzi at PIMCO, fascinating discussion that, Paul, you had with him earlier today. He says the current policy turmoil we're seeing is actually a good opportunity to invest in bonds. He calls the bond space right now a target-rich environment.
Bonds are very attractive relative to history, expected inflation, and expected volatility. Very excited about the run-up in yield as well. This is a second bite at the apple, what we've seen in recent weeks. I was afraid that yields had fallen too fast.
And then Vanguard Group slashing the fees for dozens of its mutual funds and ETFs. It is a record move and likely send a shockwave through the asset management industry. Dramatic challenge to rivals in a business where Vanguard is already one of the cheapest operators. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash.
All right, John Tucker, thank you very much. Alex Steele here.
Welcome.
Alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover everything. They cover 2,000 companies, over 130 industries all around the world. So let's get another angle to these potential tariffs on Canada and Mexico. And one way to look at it, which quite frankly I didn't think about, was insurance. Matt Palazzoa is senior analyst of P&C Insurance for Bloomberg Intelligence. He joins us now from the Interactive Broker Studio. So honestly, the insurance business was like off my bingo card list of like sectors and stuff to watch today. What's the direct correlation between a tariff and insurance?
So we're specifically focusing on auto insurance in this note, but all kinds of goods go into building materials that will impact insurance because they impact repairs. So we specifically looked at auto parts. About 50% of the imported auto parts in the country come from Canada and Mexico. There's also all kinds of interplay between the US and the other two countries where parts go in between, and parts that get put into cars come from the countries. So what will happen is those cars get damaged, the parts cost more to replace, thus the insurance companies will lose more money and they may have to raise premiums.
I guess one of the questions we have for pretty much everybody who comes in here and talks about the impacts of tariffs on their businesses, we ask, what percent of those incremental costs do the companies eat? How much do they pass along to consumers in terms of higher prices?
So I think initially the insurance companies would eat most of it. So they can't just raise prices if they want to. Insurance is regulated on a state-by-state basis. So if I want to raise prices, I have to ask the state regulators to do that. What happened post-COVID was we saw this big spike in auto insurance costs anyway, which led these companies to raise prices a lot. The auto insurance industry has kind of gotten back to decent profitability, which I would think gives them a little space to absorb these losses and would reduce the likelihood of regulators to allow them to raise prices.
Oh, right. So how does that work? So like for insurance, they have to go through the government or the state to be able to raise those prices? I was having the same conversation when it comes to regulated utilities today, too.
Yep. So every state has a Department of Insurance. Every state has a different way of doing it, but there's several ways, and a lot of states use the same. So you'd have to go in and say, we need to raise rates this much. And they would say, well, why? And you said, because our costs went up. So you can't just want to make more money, you need to have a rationale for it. And some of the states like California actually pushed back a lot on that in the past couple of years. Like some of the states were, some companies were saying, we need to actually raise prices 30% because we're losing so much money. And the state said no, and then they would say, okay, maybe you could do 7%, maybe you could do 10%. So that actually led to states threatening to pull out, or companies threatening to pull out of those states. So that's the way it goes. So you kind of have to prove that your costs went up, and then they allow you an acceptable
What's the time
margin.
frame for that? Like, how quickly can they do that?
So they can do it. They can file quickly. I think that the process will take. It could take. It took a year in California to get the prices, but that was exceptionally long. So it could probably take several months.
It's so interesting because I was talking about this in terms of utilities too. Because think about it. If, say, I'm a utility plant in Maine and I get hydropower from Canada and you tax that, can I pass that right through, or is it like a long process? Apparently, because it's considered fuel price, you can pass that right through. Like, it'll be a really quick kind of thing, goes right to the consumer. Very similar. What companies are in your crosshairs right now, Matthew?
So we're looking at, there's two big public personal lines insurance companies. That's Allstate and Progressive. We did some rough math, top down and bottom up, and we said if these come to pass, it's probably like a 10 to 15% earnings hit, but there's so many moving parts that's a really rough number. The stocks were selling off kind of anyway. Out of the two of those, I would say Progressive is probably better positioned. We just talked about the rise in loss costs earlier, and Progressive handled that a lot better. So those are the two major public companies that I think this would impact, with Progressive being favored.
Progressive is very big in motorcycle insurance. So when I got the Vespa, when I got the Vespa cruising up and down the Jersey Shore, Progressive is my insurer there. They came in with a great.
Well, that's a known risk, though, so you're okay.
You're okay. Risk. Speaking of insurance companies, so we've just recently had commercials on streaming. So it's like a new thing for my daughter because she's never had regular TV. And she can sing all the jingles, and she's all into Allstate, Progressive, and there's one more.
Nationwide.
Yes.
So
why are insurance companies so good on advertising?
I think Progressive was pioneering that, right?
Flow.
And it's with Flow, right? So right off the top of your head, because it's a commodity product, right? I mean, so you kind of look at it on price. And Progressive kind of came out with this, and Geico did it too with the cavemen and that stuff. And they really hit that niche of being able to differentiate this commodity product, and you actually saw them cut back on a lot of this advertising over the past couple of years. I don't know if you noticed it, but even if you're watching football on Sunday, you were seeing a lot less insurance
even
ads.
The Allstate guy?
The Allstate guy, I don't know where he is now. But they ratcheted it back up. Progressive did, because now they're actually getting back into price competition. So these companies love to compete away excess profits. They will do it. That's their favorite pastime. So I'm seeing maybe a little bit of that happening already, but this will throw a whole new monkey wrench in it.
It's so interesting. My daughter would literally run from her room into the living room to sing the Allstate theme. We're like, wow, I don't know what this means. This is weird and great advertising. Good job there, guys. All right, Matthew, thanks so much. Matthew Palazzo, Bloomberg Intelligence Senior Analyst for PNC Insurance. So, Paul, that was really, this so far has been quite a ride. And I wonder if we need to rethink how we look at tariffs. If you have tariffs on Mexico are delayed after there are discussions, if they're being used specifically as a negotiation tool, that's really different than looking at, say, just the trade deficit.
Yeah, exactly. And I think, there's been three arguments put forth, I think at least three arguments by President Trump's administration for tariffs. One is the fentanyl, the other is immigration, and then the third being the economic one being, having a trade surplus. We're going to target countries where we have a trade deficit vis-a-vis that country, which President Trump will characterize as unfair. And that's kind of a driver here. So again, I think all those three things probably are in play to varying degrees with various different countries, and it's just a subject of negotiation.
Yeah, and it was really interesting. There was a piece out by Brad Setzer. He tracks trade flows, and the point is, why not target countries that actually have large deficits that we don't send a lot of stuff to, like, say, Ireland, Thailand, or Vietnam, versus Mexico and Canada, where we also send a lot of stuff to. And we'll continue this conversation with Sean Donnan, Bloomberg News senior economics writer. He's joining us on the Big Take story. I bet you he did not sleep for 72 hours. We're talking more about tariff and the wrecking ball of the economy of Americans going through the different sectors. This is Bloomberg.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Interactive Broker Studio right here in Midtown Manhattan. Also check us out on YouTube as well. It is the big take story of the day. So it's a deep dive into the tariff implications for the American economy. It is titled Trump's Tariffs Aim a Wrecking Ball at Economy of the Americas. And Sean Donnan is Bloomberg News senior economics writer. Sean, the title had me thinking of Miley Cyrus and Wrecking Ball the whole morning, so I appreciate that from you. How did you just start looking at this article in terms of getting through the real tangible economic impacts? Because it's so vast and so complex. How did you find the takeaways?
Look, I think it's a very simple argument that we put forward there, and that is that if you look at North American supply chains, if you look at NAFTA going back to the 1990s and the USMCA that Trump signed in 2020, replacing NAFTA, renegotiating NAFTA, that has really been the basis for U.S. global competitiveness in a lot of ways. It brings together this mix that is pretty unique in the world of kind of a resource-rich Canada, an innovative U.S. economy, and low-cost labor in Mexico. That's a mix that Europeans would love to have, that China hasn't had yet, although it may be catching up. It really is the basis of U.S. competition in the world, and a big reason why the U.S. economy is where it is today as the world's largest. And if you look at these tariffs aimed at Canada and Mexico that were announced over the weekend, and that may be on pause today, but that were announced through this extraordinary measures of announcing an economic emergency to impose tariffs for the first time since 1971, and they're aimed at those supply chains, and those supply chains are the basis of North American competitiveness in the world. And that's what you hear from businesses. That's what you hear from automakers. That's what you hear from the computer industry. That's what you hear from the energy industry. These economies are so intertwined, and that has been a great competitive advantage. And all of a sudden, the U.S. is taking a wrecking ball towards us.
So, Sean, I guess just in the last few hours, we've seen maybe a little bit truer view of how President Trump views these tariffs, that in fact they are part of a negotiating tactic here as it relates to Mexico. How has your view changed, if at all, in the last few hours?
So I don't think my view changed at all, because I went through Trump's first trade wars where he went back and forth. And that depended on everything from calls that he got from CEOs to which advisor had been in the Oval Office last to how markets reacted. And we saw a very negative reaction from markets this morning. It seems from what we're hearing that this policy that was rolled out over the weekend was really one that was advocated by Peter Navarro and Stephen Miller, two of his most hawkish advisors on trade. You really don't have his complete economic team in place. His trade team is not in place. Howard Lutnick, the Commerce Secretary, who he said would be leading his trade and tariff policy, hasn't been sworn in yet or even confirmed by the Senate. Jameson Greer, his U.S. Trade Representative, has his confirmation hearing later this week. So, you know, there's some logic for a pause and to take a beat here. But this is how policy making happens in a Trump administration. It's chaotic, it's on and off, and it goes back and forth.
What was your best read during your piece and your reporting? How quickly will prices get passed through to the consumer?
So one of the things that's fascinating is that when you talk to customs brokers, for example, they really have all these businesses who import things who aren't ready in many cases to even pay the tariffs. There's a 10-day grace period for them to do that, but in some cases they even have to set up their accounts with the customs agency in order to pay those tariffs. So we're still working that out. I think you're going to see typically with tariffs, these things pass through over a couple of quarters, right? It's not immediate. You have inventories that businesses have and so on, but there's a definite effect on prices. The bigger economic effect, though, and this is really the lesson we takeaway from the first Trump trade war, and I spent some time earlier this month or last month reading through the transcripts of the 2019 Fed meetings when they were looking at the effects on the economy of the Trump tariffs. And the biggest thing there was the uncertainty and how that dragged on business investment and employment. Businesses, when they don't know what's coming, when they have these big potential shocks looming ahead, just hit pause on investment. They hit pause on hiring decisions, and that inevitably has a drag on the economy. So we're going to see an impact on prices, but perhaps the bigger and the broader impact could be on growth in the U.S. economy simply as a result of this uncertainty that we're getting.
All right, Sean, thank you so much. We appreciate that. Sean Donnan, he's the senior economics writer for Bloomberg News, talking to us about the big take story. You can read that on the terminal and at Bloomberg.com/big take for Sean's story there about tariffs and the impact, economic impact potentially across the Americas here. And again, I guess the news just today, it's going to be, I guess we've come to understand once again how fluid these situations can be with the tariffs presumably going to affect midnight tonight on Canada and Mexico, at least thanks to a phone call today between President of Mexico and President Trump. Delay that a month, and we'll see what happens with a phone call with Canada later today.
Yeah, and it was interesting, too. Gina Martin said something similar, talking about operating margins and taking a look at them from 2008 until now, sort of what the impact then added the uncertainty, and then the actual impact from, say, the dollar and tariffs had on companies' bottom line. So it's going to be a busy day, everyone. Fasten all of your seatbelts. That wraps it up for me and Paul on this Monday. Coming up, Balance of Power with Joe Matthew is up next after this global news update. Happy Monday.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. An apparent deal will head off U.S. tariffs against Mexico, at least for now. CBS's Stacey Lynn.
On Truth Social, Donald Trump confirmed he spoke with President Claudia Sheinbaum of Mexico. He called it a very friendly conversation and said they agreed to pause the anticipated tariffs for 1 month. She agreed to immediately supply 10,000 Mexican soldiers on the border. Those soldiers, he said, will specifically be designated to stop the flow of fentanyl and illegal migrants into our country.
And about the 25% tariff set to take hold on Canada tomorrow, Mr. Trump indicates he'll have further discussions today with Prime Minister Trudeau. Investors showed their jitters about tariffs as global exchanges saw sell-offs. An early plunge on Wall Street has eased up. Market strategist Eugene Peroni.
The reality is quickly striking the market that this could have significant and perhaps lasting ramifications and impacts on the economy.
Crews are working to get the American Airlines jet that crashed last week out of the Potomac River. CBS's Chris Van Cleve on the investigation.
Black box data indicates the airliner was flying at around 325 feet ahead of the collision. That's well higher than the 200 feet set by the FAA for helicopter traffic in that area. According to the NTSB, the airline pilots appeared to pull up about a second before the crash, and investigators are working to understand if the air traffic controller's screens were providing the helicopter's actual altitude leading up to the collision.
There's turmoil at the U.S. Agency for International Development, where staffers have been told to stay out of the agency's D.C. headquarters after Elon Musk said President Trump had agreed with him to shut the aid agency down. Overseas, Jerusalem reporter Linda Gradstein has more on the second stage of negotiations in the Gaza ceasefire deal.
According to the terms of the first stage of the ceasefire, negotiations on the second stage are set to begin on the 16th day of the truce. It comes as Prime Minister Netanyahu meets U.S. Special Envoy to the Middle East Steve Witkoff in Washington today in preparation for his meeting with President Trump tomorrow. Israeli press reports say Netanyahu will not send a delegation to Qatar until after that meeting.
Homeland Security Secretary Kristi Noem is in New Orleans with assurances ahead of next Sunday's Super Bowl.
The Super Bowl is the biggest Homeland Security event that we do every single year, and this will be the 11th time that New Orleans has hosted that event. And we plan for it to be an exciting event, one that will be safe.
And checking Wall Street, right now the Dow is down 160 points. The S&P is off 50. This is CBS News.
OptimaTaxRelief.com.
The case pitting a couple of Hollywood actors against each other is in a New York court today.
But 15 seconds, that's all it takes to completely change everything.
It'll be the first hearing for feuding It Ends With Us co-stars Blake Lively and Justin Baldoni. She accuses him of sexual harassment and orchestrating a smear campaign. Baldoni, who denies it, has sued Lively and her husband Ryan Reynolds for defamation. Lively is expected to ask a judge to dismiss Baldoni's countersuit against her and request a gag order to stop his attorneys from releasing behind-the-scenes footage from the movie shoot. A trial is scheduled for March of 2026. Deborah Rodriguez, CBS News, New York.
A postscript from the Grammy Awards. Former President Jimmy Carter, who died in December, won a posthumous Grammy last night for narrating an audiobook of his Sunday school lessons. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The trade war with Mexico appears over before it began. Welcome to the fastest show in politics as U.S. tariffs against Mexico are delayed for a month after a single conversation with Mexico's president. Your Super Bowl guacamole is safe for now. But we are still waiting for word on Canada. Markets are well off their lows either way as we see the gears turn here. And we'll have the latest ahead from Bloomberg's Nancy Cook, with insights from Naveen Giri-Shankar from the Center for Strategic and International Studies. U.S. aid workers told to stay home today after a very busy weekend for Elon Musk. We'll get into it with our political panel today. Jeannie Shanzano, Bloomberg Politics contributor, Democratic analyst, joined by Republican strategist Mark Short. It's all after a look at Wall Street. Let's start there right now. We're off the lows, as I mentioned. Charlie Pellet has the latest on the markets in New York. Charlie?
And good day from New York. Joe Matthew, indeed, stocks off the boil. The Dow, the S&P, NASDAQ 100 index, Russell 2000 still very much in the red, but as you correctly point out, well off session lows. Right now, we have got the S&P down 48, 59.92, a drop of 0.8%. The S&P had been down almost 2% earlier in the session, but President Trump confirmed he agreed with Mexican President Claudia Sheinbaum on an immediate pause of anticipated tariffs for 1 month. That did spur a quick rebound of the peso. The Dow down 136, now down 0.3%. NASDAQ, though, still hard hit, down 241, a drop there of 1.2%. The 10-year 4.51%, the 2-year 4.23%. Gold is up $18 the ounce, 28.17, up 0.7%. West Texas Intermediate crude up 0.2%, 72.71 a barrel. And Bitcoin right now trading higher by 1.5%. Bitcoin 98,492. Reaction to the tariffs from Jason Furman, a professor at the Harvard Kennedy School and a former chair of the Council of Economic Advisors in the Obama administration.
I thought there were too many tariffs in Trump's first term. I thought they were too poorly designed. But this is just at a massive scale relative to those. And these are against close allies. And this is less than, this is basically 2 weeks in to the administration. And he's promised us he's just getting started.
Harvard's Jason Furman, but again, President Trump confirming he did agree with Mexican President Claudia Sheinbaum on an immediate pause of anticipated tariffs for 1 month. Semiconductor makers and equipment suppliers are lower today on tariff concerns. NVIDIA right now is down by 3.1%. Broadcom down 0.7%. Qualcomm lower now by 1.25%. And Applied Materials down by 0.9%. Bottom line here, the Dow, the S&P, NASDAQ all lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, great to see you, Charlie. Hope you had a good weekend, and welcome to the Monday edition of Balance of Power here on Bloomberg Radio, on the satellite radio, and on YouTube, where you can find us right now. Of course, As always, search Bloomberg Business News Live. We make it pretty simple for you. We always save a seat for you in the studio. With big news today, boy, it felt a little different before the markets opened or before the big meeting, the phone call with Mexico's president. Is that a perfect call? Claudia Sheinbaum on the horn with Donald Trump this morning, who agreed to delay the tariffs 25% for a month at least. And Wall Street is wondering if maybe we can do the same here in 11th hour talks with Justin Trudeau. China, not so much. We're dealing with our neighbors today to the north and south. Donald Trump having talked about this when he landed at Joint Base Andrews last night. Listen.
We may have short-term a little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that.
Writing something similar on Truth Social, quote, will there be some pain, he asks? Yes, maybe. And maybe not, exclamation point. But we will make America great again, and it will all be worth the price that must be paid. Again, markets didn't love that idea. Things looked real shaky this morning, and as Charlie just told us, we're off the lows. As we bring in the voice of Nancy Cook, Bloomberg's senior White House correspondent who had a busy weekend tracking all of this. You must be breathless. It's great to have you for a minute here on Balance of Power. Nancy, great to see you. Let's unpack some of this. We'll start with Mexico, I guess, because that's what just moved. Is that what this is? We were asking this last week. We never had real intention of implementing 25% tariffs, but you put it on the table, you see what you can get, and you look like a hero when you rescind them. Is that the strategy?
Yeah, so just to put the tariffs in context, as of last week, the middle of last week, they were still deciding what to do. This was, not something that they had planned out sort of in great detail. There was still like a lot of disagreement among Trump's economic advisors, his team, his informal economic advisors about what to actually do on the tariffs and how far to go. And so they were sort of building the plane as they were landing it.
Okay.
I will also say that a lot of the personnel that would be involved in the tariff discussion are not in place yet. And so the people who are really involved in this in the White House were Stephen Miller, the deputy chief of staff, who does have much more hawkish views, and Peter Navarro, who we know from Trump's first term has very hawkish views on trade in China. And so, Scott Bessent was just named Treasury Secretary. He's not really in the mix yet on tariffs. Neither is Howard Lutnick, who has not been confirmed yet. So Trump doesn't have his whole team in place. And so I would say he's influenced by the most hawkish voices.
Well, so Mexico has some levers to pull here, right? The part of the agreement was to station 10,000 troops along the border, try to keep drugs out of the company. A lot of this has to do with fentanyl. Kevin Hassett this morning referring to this as not a trade war, but a drug war. What levers, if any, does Canada have to pull today to turn this around?
That's a great question. I mean, Trump up until this point has not been taking Trudeau's calls since the inauguration. I think he has it in his mind that, Canada's bad, but Mexico's okay. And even when I talked to people in Trump world last week, there was a sense that Mexico was doing things to appease him. So they were putting troops at the border. A lot of the Mexico tariffs are related to fentanyl and Trump wanting to stop the flow of fentanyl into the country. And there was a sense last week that Mexico was more amenable to doing things, but I did not hear the same about Canada. Wow. So I'm not sure what the outcome of this 3 p.m. call will be with Trudeau, but just keep in mind that he has not talked to Justin Trudeau since, the inauguration.
That's amazing. 3 p.m. call, that's what we're going to be looking forward to here. But, a fraction of the fentanyl coming from Mexico is crossing the Canadian border, correct? Mexico is a much greater offender in this case. You think about the talk about the wall. They're emptying their insane asylums, their prisons, he said. We've been hearing about Mexico since before his first term. How did Canada become worse?
I don't know, but so much of diplomacy with Trump is sort of being quiet, getting on the phone with him, making it seem like you are meeting his demands. And I think that the Mexican president, has evidently done that. I mean, I don't know yet what the contents of that call were that he had at 10 a.m. or this morning with her, but she seems to have done a better job of sort of appeasing him and making him think that they are taking the steps that he wants.
Maybe 10,000 Mounties on our northern border.
Who
Is that what we're going to hear about later? This is wild. Okay, so Nancy, it was a busy weekend, as I mentioned. The tariffs are getting all the attention right now. I would suggest that what we saw happen with Elon Musk over the weekend, with U.S. aid and with the payment system inside the Treasury, might end up having greater repercussions long term. Can you describe what some of these efforts are to do away with U.S. aid? I see a headline now, according to reporting, that Marco Rubio will now be in charge of this as the Secretary of State. It's a reorg of this part of government, but it also has to do with our payment system.
Yeah, I think that this is the sleeper, most important issue of the first 2 weeks of the Trump administration. Elon Musk and his Doge teams took over the payment systems at the Treasury Department, which is a huge deal because that contains a lot of Americans, personal information, Social Security information, taxpayer information, very sensitive personal information. Meanwhile, Elon Musk is not elected. Yeah. He is not Senate confirmed. We do not know what sort of background checks he has gone through. We do not know, how him having access to Americans' personal financial information intersects with his business interests. There's just all these things we don't know. Wow. So Doge is really moving in. They have these teams of 4. They're going into each federal agency and trying to take over the spending. They are doing this at USAID. I heard this morning they tried to do this last week at HHS. So they're sort of moving very quickly to all these agencies. What I am waiting to see is how the Trump people, how this plays out over the long term. I think that they like some of the federal spending cuts, but do they end up feeling like Elon is going too far?
Yeah, I mean, he's, to your point, this is someone who's technically not a government official. Right. I'm not sure if we can call him that running the Doge, who now has the keys to the castle. He has all of our personal information.
Yeah, and with USAID, sure, I think that there's part of the MAGA base that feels like we should not be spending money on these foreign policy things.
Easy target, right?
Right, but there are also a bunch of Republicans on the Hill who have gone on overseas trips and, think that some of these programs also play into foreign policy and national security concerns. And it's an important part of diplomacy. And so I don't think that the USAID cuts are going to be universally popular on the Hill.
Well, I do wonder what we're going to hear from lawmakers when they come back to town. There's a Democrat from New Jersey, Tom Malinowski, who says, by the way, any member of Congress has the power to force an emergency vote on the tariffs, on undoing the tariffs under the National Emergencies Act. Is this going to be the beginning of the tension between both ends of Pennsylvania Avenue?
I mean, with the tariffs, I think we have to wait and see. Trump has backed off of them for Mexico for 1 month. We'll have to see if he really backs off of them. I mean, my question with the tariffs is just like, he views them as a weapon and a negotiating tool.
That's right.
I think more so than, he does not want to tank the U.S. economy. Yeah. He does not want prices to go up for consumers.
Does he want to tank Canada's economy? I mean, that could prompt a recession.
Yeah, who knows? But, he doesn't, he wants people to accede to his demands, and he views tariffs as part of it. And so, who knows if he'll sort of keep the Canadian tariffs on long term.
Promises made, promises kept is what the White House would say here, right?
That's what they love to say.
This should not be a surprise to anyone if you were following this campaign, which is something that they can say with a straight face. You wonder if any of these are going to be in place by the end of the day, or maybe we should draw the line at China. Those aren't coming off anytime soon.
I don't think the China tariffs are coming off. I think that those will probably stay. But, my reporting shows that even last week, what those tariffs look like and when to put them on China were up for grabs.
Yes, okay.
And so this is a policy and a strategy that, as I said before, is really being developed on the fly a little bit.
Fascinating. Yeah, we built the plane just in time for landing, as Nancy Cook says. Doesn't Nancy have a grounding effect? You can tell everything's going to be all right at some point. We'll keep tabs on the markets for you, the impact of these decisions, of course, and insights ahead from CSIS and a conversation we've been looking forward to with Naveen Gary Shankar, our political panel up later this hour as well on the fastest show in politics. This is Bloomberg.
6:21 on Wall Street. We do check markets all day long here at Bloomberg. President Trump agrees to delay 25% tariffs against Mexico for 1 month after a conversation with his counterpart, Claudia Sheinbaum. Stocks are trading lower right now as traders wait and try to catch up on every new headline around Trump's tariff negotiations. Right now, the S&P is at 59.97, down 43. We are well off session lows, down 0.7% right now. We did at one point have the S&P down by almost 2%. The Dow now down by 100 points, down 0.2%. And we've got NASDAQ down 223 for the NASDAQ Composite Index. That is a decline right now of 1.1%. The 10-year yield at 4.52% with a 2-year currently yielding 4.24%. Spot gold up $17 the ounce, 28.16. Looking at records today on the precious metal, up 0.6%. West Texas Intermediate crude oil up 0.3%, 72.75 a barrel. And Bitcoin right now up almost 2%, 98,845 on Bitcoin. So again, the Dow, the S&P, NASDAQ all declining, down now by 0.7%. Trump tariffs certainly reverberating across global names and industry groups. Among some beverage companies today, we are seeing Constellation Brands, which imports Corona, Pacifico, and Modelo beers from Mexico. Constellation Brands down now by 2.6%. Diageo, the global spirits company, down 1.7%. And Molson Coors Beverage, which imports beverages from Canada, our ticker symbol TAP, T-A-P. Molson Coors right now is trading lower by 1.3%. Automaker shares also under pressure because of tariffs. General Motors down now by 2.2%. Ford shares are declining by 1.5%. And Stellantis right now trading lower. We've got Stellantis down by 3.5%. Again, recapping here, the Dow, the S&P, and NASDAQ all lower, with the S&P at 59.98, a drop right now of 41 points, down by about 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. On the markets for us all day, and for good reason. We've been watching these numbers bounce around, pulling way off the lows of earlier. Could this thing turn positive after the call with Canada? You'll need to stay with us all day here. Charlie will certainly be watching. What was that? Dow down 600 points at one point. We're looking at a 75-point loss. Of course, this has a lot to do with the progress in Mexico, and then we're counting down to a 3 o'clock call, 3 p.m. Will it be a perfect call? Donald Trump and Justin Trudeau talking about the implementation tomorrow of 25% tariffs across the board. The U.S. national anthem was booed by hockey fans on Saturday in Ottawa, booed last night by NBA fans in Toronto. I don't know what they're singing today in Mexico, but the market certainly liked the idea that Donald Trump had some time to talk with Mexico's president. And sure enough, the tariffs are delayed. As we heard earlier from the president of Mexico, who takes us inside the phone call with Donald Trump, speaking through a translator here. Let's listen.
Then he agreed, and at the end asked me how much time I wanted to put on pause. I said, well, let's put it on pause forever. And he asked how long. I said, let's put it on pause for a month. And I am sure that in that month, we will be able to have results. Good results for his people and good results for Mexico.
It's Claudia Sheinbaum. Let's put it on pause forever. And he asked, no, how long? It does make you wonder the substance of these calls, and maybe something similar. Could something similar happen with Canada later on today, knowing that Mexico pledged 10,000 troops to stand along the border to keep drug trafficking and illegal immigrants out, keep the fentanyl out? Is there a similar agreement that could be struck today with Canada? Doesn't appear clear to us at this moment, which is why we need to wait for the readout on this call. Naveen Gary-Shankar is wondering what happens as well. That's why we have the president of the Economic Security and Technology Department at CSIS with us right now, former senior official at the Department of Commerce. Naveen, I'm sure you never heard of a moment quite like this where we have things knocking around. It's going to be different from 1 hour to the next, it appears, over the course of the day. I'm supposed to ask you about the impact of tariffs, but Is that the point of this conversation, or are we simply using these bargaining chips to exact concessions from our neighbors with no real intention of ever implementing them?
Well, thank you, Joe. It's great to be here. It certainly seems like the use of AIPA, the Emergency Economic Powers, to institute these tariffs are designed to achieve some ends with respect to fentanyl interdiction. Now, fentanyl is a serious public health issue and deserves the attention the president has given it. However, the real question is whether the potential trade war that we're facing down right now is really worth the risk in terms of addressing what is essentially a joint law enforcement and interdiction type of effort that's required.
Well, so is this a trade war or a drug war? The White House was using the latter term this morning.
Well, I would say that we looks like we're on the precipice of a trade war, unless we're at T-1 or less, because these tariffs go into effect at 12:01 a.m. on February 4th. The dance between Mexico and the U.S. right now perhaps is a way to forestall that. The real question is, shouldn't we be fighting a tech war? Because that's really what the issue is as far as economic security of the United States is concerned. And I think that this may actually be ultimately somewhat of a distraction from what we should be focused on. And certainly I think the administration is aware of this, but again, the question is about focus.
Okay, so Naveen introduces an interesting idea here and a smart question. By the way, Naveen, no one's talking about the 10% tariffs against China, which are more likely to be implemented or kept in place, I would argue, than the Canadian or Mexican tariffs. We've talked recently about turning the screws on export controls for high-tech GPUs, the advanced stuff that NVIDIA is selling, for instance. Is that the direction you're looking in, and why are we talking about Mexico and Canada if that's the case?
Well, the reason we're talking about Mexico and Canada is because the North American economic ecosystem is highly integrated. Those players have much to lose given their export exposure to the United States. But with respect to China, the 10% tariff, remember what they had priced in was something like 60% tariffs based on what the president had said during the campaign. So this is much lower than that. We will feel the hit here in the U.S. on things like electronics and other types of goods and services like that from China. But I think the bigger question which you pose, which is an important one, is we should be thinking of the economic relationship with China covering a number of economic security tools: trade, export controls, investment screening, and other types of measures that are intended to actually strengthen the U.S.'s hand with respect to the technology competition that is now accelerating across a number of technologies.
If the fentanyl is coming from China and going through Mexico and Canada to get here, most of it through Mexico, that also can change the way you're looking at this drug war. Why don't we go to the source instead of
100%.
play with the partners?
100%. And as you'll recall, during the Biden administration, there was an agreement with President Xi to work on that issue. I think you have certainly put your finger onto a really important issue, which is the source. And I think that is a curious decision to prioritize what is in effect harder measures with Mexico and Canada right now relative to the Chinese. Who knows what's coming down the pike in terms of the game plan of the administration, but sequencing matters. And so now we're going to focus on our closest allies relative to what is our principal competitor.
Naveen, I see a headline just crossing the terminal. Secretary of State Rubio, Mexico sending National Guard to the border is, quote, a very good sign, unquote. Is there an equivalency here for Canada? What is it that Justin Trudeau can promise Donald Trump on the phone at 3 o'clock? You're going to line up the Mounties and that's going to be it along the northern border here, or is it something more than that?
Well, it's interesting because the AIPA order was focused on fentanyl, and the cross-border fentanyl from Canada is relatively small, like very, very small, negligible relative to Mexico. And so really the question is, what's the goal of this, and what do you really want from Canada? Are there unstated goals that are not in the AIPA order, or is there something more? And so I think that explains the difference in the way that relatively Canada and Mexico have responded. So Mexico has, really made a number of measures, and you just read that out, to demonstrate focus on fentanyl. Canada's response is a little bit different. They've said, well, we'll retaliate. I think the Ontario premier has said that he's banning U.S. companies from government contracts in Ontario. So it's a much harder stance. And it's really because these measures affect those countries differently, and their potential kind of alternatives are also different. Remember, our relationship with Canada is also important with respect to the competition with China, both in terms of critical minerals that we need for advanced technologies, Canada's role on implementation of export controls, and also the fact that Canada is going to take over the G7 presidency, and we need partnership with them to again win the bigger war, if you will, the tech war.
Wow, that's a good one, Naveen. I haven't heard anybody mention that, the G7. We like data here at Bloomberg. Let's put some numbers on this. To your point, Canada negligible as a source of fentanyl trafficking. 43 pounds came across the northern border last year versus 21,000 pounds across the southern border. Gives a little bit of perspective to what we're talking about. Naveen, what does this portend for the EU? Donald Trump says Europe is next.
Well, there are two things. He says they're next. Again, the question is going to become, what are the goals of whatever tariffs he puts on the EU? Are we dealing with trying to address bilateral trade deficits? So, for example, in the case of Mexico and Canada, you may put these tariffs on both countries, but you will likely experience an increase in imports from other countries like Germany, like those in Europe. So the overall aggregate trade deficit will not reduce, but you might shift which countries you have a deficit in relative to others. And so the question is, what's the goal with respect to Europe? Is it to address the bilateral trade deficit? Well, let's see what the president does there. Is it to achieve some other non-economic ends, such as the fentanyl case here in North America? Are there other goals he's trying to achieve with Europe? Potentially there are. And then you'd have to ask the question, are these commensurate? You have economic measures, the costs of which we don't fully understand because they have to play out. And then you're trying to achieve relatively short-term actions on non-economic policy issues. And so the question is it a good motivator for that? That is, the jury is still out on that.
Smart Talk. Naveen, thank you for joining. It's great to have you. Naveen Girishankar, CSIS, the Center for Strategic and International Studies, formerly with the Department of Commerce, a voice of experience, as we always try to bring you here on the fastest show in politics. We'll keep working our way through this. It has been quite a doozy of a couple of days. Our political panel is up next today. Jeannie Shanzano, our Democratic analyst, with Republican strategist Mark Short on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Secretary of State Marco Rubio says Mexico sending the National Guard to the border is, quote, a very good sign. Rubio also says he is now in charge of the U.S. Agency for International Development after the Trump administration and its allies put senior staff on leave and threatened to shut it down for good. The Dow, the S&P, NASDAQ, all are declining right now. A lot of red on this back-to-work Monday. Traders, meanwhile, trying to catch up on every new headline around President Trump's tariffs negotiations. S&P well off session lows, down 53, now down 0.9%. The Dow down 158, down 0.3. NASDAQ down 262, a drop there of 1.3%. 10-year 4.53%, the 2-year 4.24%. Spot gold is advancing $18 the ounce, 28.17, up 0.7%, while West Texas Intermediate crude up 0.2%, 72.71 a barrel. There is a shred of positive news today about America's economy, and with that story, here's Bloomberg's Vinny Del Giudice.
Industry data show U.S. factory activity expanded in January for the first time since 2022. Orders and output both advanced based on data from ISM, the Institute for Supply Management. A separate report from Standard & Poor's also points to growth. The outlook for American manufacturing is hazy just the same, based on tariffs, plotting growth abroad, and the depressing impact of the U.S. dollar on trade. Vinny Del Giudice, Bloomberg Radio.
Major automakers trading lower on tariff concerns. General Motors down 2.6%. GM produces vehicles in both Mexico and Canada. Ford shares down 1.7%. And Stellantis, the parent of Jeep and Chrysler, trading down by 3.7%. Again, recapping, S&P lower by 56 right now, down 0.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back, we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, great to see you, and thank you so much here on the Monday edition of Balance of Power. Remarkable evolution that we've seen in the market so far today as the tariff story has evolved, and it could evolve again. Donald Trump is going to be speaking with Prime Minister Justin Trudeau at 3 p.m. Eastern Time. Maybe he can duplicate the results of his meeting with Claudia Sheinbaum of Mexico, delaying the implementation, I should say, of tariffs for a month. China, we're going to put in a different bucket today. But with regard to Canada and Mexico, our two immediate neighbors here, this is something that has changed a lot already. We are sitting here on the eve of the tariffs being implemented. The market thinks it knows something. The question is, what can Justin Trudeau offer that might delay the tariffs here? Is it 10,000 Mounties along the border, as Mexico is giving us in the form of their own troops? Our political panel is with us today to talk about this and a lot more. Jeannie Sheehan Zaino, our Bloomberg Politics contributor and Democratic analyst, with us in New York, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. With me here in Washington, Republican strategist Mark Short, former Chief of Staff to former Vice President Mike Pence. Great to see you both here. And Mark, thanks for being with us in studio. It's great to have you as part of our conversation, as always. Do we step back, big picture here, and say, well, I guess tariffs do work, you just don't have to implement them?
I think that President Trump, even his first administration, was very effective in the negotiation with tariffs and to use them to bring people to the negotiating table. However, I do think there's a big difference between the first administration and the second administration. In the first administration, the president had a lot of economic advisors, but also national security advisors who believed in the benefits of trade, not just for the economy, but for national security. The team that he has around him today is a very different team that has a much more protectionist perspective. And so even though there may be some 30-day relief here in the Mexico tariffs, I think that the advisors he has around him right now believe very strongly in a protectionist policy because they really believe that the manufacturing base of America has been hurt by trade. And so I think that this may be a temporary reprieve. I don't think it'll be a permanent reprieve. I think this administration will be moving forward with a whole slew of tariffs in the coming months.
And maybe come back with something more targeted toward Mexico, for instance, auto sector or otherwise?
Perhaps, but I mean, even at the same time that these threats are being settled, he's threatening new tariffs with the EU.
That's right.
And so I think that, typically with the U.S. Trade Representative's office, it requires about a 90-day investigation to prove unfair trade practices. And you've heard the administration hint that April is when a lot of those investigations will come due. What he had threatened with Canada and Mexico was unique under IEPA, the Economic Powers Act, that no administration ever used that for tariffs. And so I think there was other challenges potentially in the courts on that. And so if there's a backing off of some of the Mexico, I still think it's going to be coming when these investigations are complete.
Wow. So, Jeannie, are we looking at a master at work here or an economic arsonist?
Well, I think it could be somewhere in between. We did hear for a while that even, especially people in the market were not that concerned because they said this is going to be transactional in nature. We're going to get these negotiations as we've seen with Mexico, and that this would in the long term not have a real economic impact. But as a political scientist, let me say that there is a price to pay for this. We teach our children not to bully in the playground for a reason. And we don't bully in the international realm either for a reason, because there are long-term impacts on our national security and our alliances. If you are another country and you are looking at this bullying, are you inclined to trust your alliance with the United States, or are you more inclined to go, say, the way of China and Xi Jinping? There is a school of thought which says all the inroads that Xi Jinping has made in the global south, he is the beneficiary of this kind of bullying. Donald Trump does this because he has long held that we are on the losing end of a trade deficit. But the reality is he is president of the United States and our alliances matter. And this is true not only if you look at this story about tariffs, but also if you look at the U.S. aid story. So long term, the impact on us, I am extremely concerned about. Short term, we may all survive this economically.
Mark, you were there for the renegotiating of NAFTA, I guess if we can call it that, creating the USMCA. Is Jeannie correct about bullying, and does a weakened Mexico and China embolden China, or Canada rather, embolden China?
Well, I will say that even in the USMCA trade agreement, there was a clause that allowed, under national security emergencies, an ability to obviate the treaty and to move forward with tariffs. And I think that that's why you've seen the president use fentanyl and the border crisis, which I think certainly applies to Mexico. It's a little bit harder to see the emergency with the border in Canada. But I think that I'm less worried about the bullying factor. I think that for a lot of Americans, they do feel that there's been a weakness of American foreign policy for years. And I think they welcome a stronger personality. But I think Jeannie makes a really good point about China being the beneficiary. Because I remember in the first administration that, for instance, it took a lot of negotiation, if you recall the Huawei controversy, for us to get Canada onto our side on Huawei against China. Are they going to be as excited to partner with us the next time around when we have a concern about China? And so I think she makes a really good point that in some cases when you're tearing down these alliances, you force some of our former allies into relationships with some of our adversaries. And I think, again, that's where our national security advisors in the first administration believed in the benefit of that trade, that currently those are not the same advisors this go around.
We're spending time with Mark Short and Jeannie Shanzano, our great panel on the Monday edition here of Balance of Power. It was a very busy weekend for the Trump administration. While you were going about your business, it wasn't only tariffs they were talking about here. What we saw take place with USAID, USAID, was quite remarkable here. Elon Musk declaring on X, USAID is a criminal organization. Time for it to die. We know that a lot of things happened there over the course of the weekend. Workers were told to stay home, and since we've arrived here this morning, we're told the Secretary of State, Marco Rubio, has taken control of USAID. Jeannie, your thoughts on this, and I'll ask you about this payment system at the Treasury, because it strikes me that in the end, these could be more significant stories than what we're hearing about tariffs today.
Yeah, Joe, you forgot to mention the other big news of the weekend, which was Puxatawny Phil, so we're in for more winter. But besides that,
I'm depressed already, I know.
Yeah, I'm sorry. On USAID and, of course, the Treasury story, you know, I mentioned this prior because it seems to me it's part and parcel of Donald Trump's approach to the world. And certainly you have people in the U.S. and around the world who support it. I do get concerned a good deal that we are seeming to lose understanding of something that China, which Mark just mentioned before, knows intuitively. Soft power matters. Now, USAID, certainly, there is waste in all government programs. Certainly, no question, can be cleaned out. But I am worried when we start to think that something, you know, talking about people within there as, you know, somehow criminals without evidence, when we talk about it as needing to be dead or destroyed, certainly, again, cleaned up. But soft power matters. And if the United States doesn't exercise soft power, that power shift will go elsewhere, like China and Russia. And nobody does this better than Xi Jinping. Look at the Silk Road. Look at, again, the inroads into the global South. We are losing our ability to be seen around the world as anybody but demanding, harvesting people, mining people's goods. We also have to help the poorest people in the world if we want to have an ability to have impact. You know, somebody just reminded me that there was a point just before World War II when somebody told Truman that hunger means communism. And we fight that by showing people that democracy can deliver for them and us. And soft power matters in that.
Mark, I don't know your thoughts on this and the idea of kind of giving the keys to Elon Musk, but I think of you as an older style Republican, an institutionalist, maybe a more traditional Republican. Maybe you've gotten your head around tariffs. Are you getting your head around this?
I think that on USAID, that I think for a lot of Americans, they do want a more of America First policy. They do feel like there's been a lot of taxpayer dollars abused. But it's important to note that I think President Trump has an effective way of throwing an idea out, seeing what the market reaction is, and then adjusting. And so over the weekend, it was, as you just read from Elon Musk, it's criminal, it'll be abolished. And now it's like, well, actually, it's just going to be shrunk and put under Marco Rubio's surveillance. So there's already an adjustment within a very quick amount of time as to what actually is going to be happening.
So are we back to the take him seriously, take him literally debate?
Well, no, I think it's important to know he often throws ideas out and sees reaction, and I think that seeing how the market reacted over the weekend to the tariffs, I think helped modulate on Mexico by this morning. So yes, Mexico came back to the table saying they'd put troops at the border, but I think the president was also looking for a deal because he didn't like that market reaction. So he is always going to be sensitive to what the either the financial markets or the popularity markets do. But to another point that Jeannie was making, I think another story was lost here is that, you know, I thought Marco Rubio had a significant achievement in Panama with the Belt and Road Initiative. But I felt in many ways that President Trump undercut that by coming out, you know, yesterday and saying, well, that's not really our objective. We're going to take back the canal. I mean, getting Panama to distance itself from the Chinese investments was a huge win for Marco Rubio. That was the whole point, wasn't it? Yes. So I felt like that was undercutting what I thought was a very significant foreign policy achievement by Rubio and the State Department.
That's fascinating. Jeannie, I don't know your thoughts on this. Is the job done in Panama?
No, I don't think it's done. And I agree with Mark. It was a win on the part for Marco Rubio and the State Department. And yet with all of the noise, it's very hard, especially when the president steps on it, for them to get that message out. And so, you know, you wonder how frustrated Marco Rubio might be at this point. But I do think that, you know, as we look at what has happened in just the last few days, you see the president testing, you know, as Mark said, testing things. The problem is there are real people impacted by these tests. You mentioned the Treasury issue. You had an employee of 35 years who suddenly left. And so Musk's people were able to get access to that system. You know, I'm at a university. All of our funding has been frozen. Now, these are not the worst impacts in the world. But testing reaction makes you seem in some ways a bit incompetent. And so, you know, it's going to matter how they implement these policies. And so far, the implementation has left many people around the country scratching their head. If you want to cut, but there's a process by which we do that in the United States. You are not king. You're the second branch of government.
We only have a minute left, so you're saved by the bell almost already. If Elon Musk is going to have access to all of our personal information, should he go up to Congress and be confirmed as a government official member of the cabinet?
Absolutely. No private citizen should have access to that. So if that's truly what's going to happen, then absolutely he would need to get confirmed, I think, to have that sort of authority and power.
Create a new Doge commission or, I guess, department that's actually real and part of the government.
Yes, but I still think at the end of the day, they're going to retract that power from them.
There you go. Mark Short. Can't believe you're here with us. You're along with Jeannie Shanzana. We're going to have much more with our panel in our second hour of Balance of Power. So stay with us right here on Bloomberg. Kaylee Lyons will be on the way in next, and we'll welcome our global television audience to the conversation. We are hearing from Donald Trump. He's talking to reporters in the Oval. We'll let you know what he said. A 3 o'clock call with Canada later today. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
But what about Canada?
Welcome to the fastest show in politics as President Trump prepares for a call with Justin Trudeau just 2 hours from now on what is the eve of 25% tariffs taking effect. I'm Joe Matthew alongside Kaylee Lyons in Washington. Welcome to the Monday edition of Balance of Power. This, Kaylee, follows a call with Mexico's president that resulted in a months-long delay, if you believe all of this, on tariffs. So stand by. This could still change again.
Well, it certainly could. Mexico, in exchange for having tariffs delayed for a month, has agreed to send 10,000 troops to the border with the U.S. to crack down on the flow of fentanyl and migrants, which, of course, is the root of what Donald Trump says these tariffs were being threatened for. Canada, though, still an open question, as is China. Remember, 10% levies on all Chinese goods set to go into effect at midnight tonight, barring some kind of deferral like what we've seen with Mexico. And Donald Trump speaking to reporters in the Oval Office as we speak, saying that he'll be talking to China probably over the next 24 hours.
Sure, that's right. And of course, those are kind of three different buckets with three different opportunities to resolve a trade war. Mexico sending 10,000 troops to the border. It's unclear if the same promise from Canada would make a difference. And of course, China's in a completely different conversation. But we've seen the markets come way off their lows from what was a fitful start here in trading on the idea that this might evolve further today.
Well, it certainly could. It's a fast-moving story, and we'll bring you more remarks from President Trump as we get them. But certainly it's because the market is weighing the potential economic impact if these were to go into effect. So let's get the latest on where we stand in this Monday trade and turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much. Indeed, just getting word that President Trump has signed an executive action he says will direct officials to create a sovereign wealth fund for the United States, following through on an idea he floated during the presidential campaign. Stocks lower across the board right now. The Dow, the S&P, NASDAQ, all in the red, but the S&P down 54, 59.86. We are off session lows, but still down 0.9%. The Dow down 174, down 0.4%. NASDAQ down 263, drop there of 1.3%. 10-year 4.51%. The 2-year 4.23%. Gold up $19 the ounce to $28.18, trading at a record of 0.7%. West Texas Intermediate crude oil up 0.1%. Little change now, $72.58 a barrel. So again, recapping, stocks lower, S&P down 54 points. All of this on tariff concerns, down 0.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Meantime, here in Washington, more specifically at the White House, President Trump is currently in the Oval Office answering questions from reporters about a range of subjects. We've learned, Joe, that he does intend to create a U.S. sovereign wealth fund. It will be headed by Scott Bessent, the confirmed Treasury Secretary, and Howard Lutnick, the yet-to-be-confirmed Commerce Secretary. What's less clear, though, is what exactly is going to happen within the next 12 hours on tariffs after a delay in the imposition of 25% levies on Mexico, Canada, and China remains unclear.
That 10 o'clock call with Claudia Sheinbaum went pretty well, apparently, and we've already got a 1-month delay on the promised or threatened tariffs against Mexico. These were all supposed to take effect tomorrow. So that could still change again for Canada. 3 p.m. is the call with Justin Trudeau. And there's a question here in Washington about, what exactly Donald Trump's tariff policy is. Is it implementing these levies for some certain advantage, or is it to simply exact concessions before they take effect?
Well, he just said on China specifically, if we can't make a deal with China, the tariffs will be substantial. So to your point, Joe, it's a question of what that deal needs to be composed of in order to satisfy the president, who I would remind everyone was only inaugurated 2 weeks ago. And this is where we find ourselves.
2 weeks today. That's why Sean Donnan's a pretty popular guy today, in demand with the column, the Big Take column, on the terminal and online. The headline says it all. Trump's tariff aimed a wrecking ball at economy of the Americas. Sean, it's great to have you. We should note that these are 3 very different scenarios, right? When it comes to Mexico, when it comes to Canada, when it comes to China. Is there anything Canada, for instance, has to offer that would be on par with Mexico to diffuse this?
Look, we could see that this afternoon. And I think what we have always seen with Donald Trump is him looking to the markets for reaction, him looking to how businesses react. And we've seen a pretty hard pushback from business groups, from companies, from the markets today to this tariff announcement at the weekend. So if he's gotten out, at least he can put off, bump the markets up a little bit. This used to be Larry Kudlow's job in the first Trump administration, when he'd go out and talk the markets off the ledge. We may see that again this afternoon, and with China and so on. But there's this thing that was really a reminder of what we saw in the first Trump trade wars over the last few days, and that is that Trump injects a huge amount of uncertainty into the economy. And when we look at the North American economy, when we look at the supply chains and all of those goods that cross the borders north and south of the U.S., that's one of the great sources of U.S. competitive advantage in the world. And if you are throwing a bomb at that, or if you're swinging a wrecking ball at that, as we say in today's piece, that is not good for the economy, and it really raises some big questions in the C-suites of businesses as to where they deploy investment, how they respond.
Well, and the way in which economists and corporate executives view this is different than the way the president and those close to him see this. They argue that tariffs will not be inflationary. You may get a one-time price increase, but not sustained inflation. Donald Trump also argues these goods he's talking about tariffing from Canada specifically, we don't need them. To what extent is that true? How easily replaceable are they for the U.S. economy?
Well, I think most economists disagree with Donald Trump and the Trump administration on the price impact. But more importantly, they also look at what happened in 2019 when we saw a big hit to growth in the United States. And that's a lot of what the market concern is about today. And that's about if you have trade wars, you have a slowdown in global growth. You have a slowdown in U.S. growth. You have a slowdown in U.S. demand for goods from the rest of the world. That's bad for the global economy. That's bad for the U.S. economy. That's bad for companies. That's bad for Wall Street investors.
Do we have a sense of why Canada is being put in the same bucket as Mexico here? When you talk about fentanyl, 43 pounds crossed the border from the north last year versus, I believe, 21,000 pounds across our southern border. Is there an equivalency here in his mind?
I mean, in his mind there is, but it's hard to see.
What did Canada do wrong to get on that list?
Well, I don't know. I think what seems to be that they did wrong was an economic question, and that is, and he's mentioned that, and that is the fact that they have the trade surplus with the U.S., which, by the way, is largely the result of oil exports and energy exports to the United States, which are imports that the U.S. needs. If you are a consumer of electricity or any kind of energy in New England and the upper Midwest, you rely on imports from Canada. I think what we're seeing here also, and this is going to add to the uncertainty for markets going on, is clashing goals in terms of Trump's tariff policy. On the one hand, he wants to use them for leverage. On the other, he wants to use them to rebalance trade. And the third one, which is more important in terms of the conversation here and on Capitol Hill when it comes to tax cuts and funding tax cuts, is he wants to use them for revenues as well. Those aren't goals that kind of all join up neatly. And obviously, if he's just trying to extract a deal, that's going to hurt your revenues in the end.
Well, the other thing he says he's trying to do is protect American industry specifically. He keeps saying you won't face a tariff if you make it in the U.S., but for companies that do manufacture here, if the costs of imports that they're using in that process go up, I mean, is it necessarily net only positive for American manufacturing?
No, and we saw this in 2019. It was very obvious. The U.S. in 2019, which is the first full year after Trump began imposing tariffs on China and steel and aluminum, the U.S. actually lost 43,000 manufacturing jobs that year. And that was because uncertainty hit businesses. They weren't making investments, and they weren't hiring people, and they were laying off people. I remember going out to Wisconsin at the time and talking to companies who were literally furloughing workers as a result of the cost of tariffs.
All right, well, it's great to have your reporting this time around. Another trade war for Sean Donnan to cover here.
Here we go again.
Where he's a senior writer for economics. Thank you so much. Appreciate it. Although, I guess there's no guarantee this is going to turn into a trade war at this point, with uncertainty as to whether or not all of the tariffs Donald Trump said would go into effect at midnight will be deferred.
Well, that's absolutely right. These meetings could result in changes. We certainly saw that happen once already today with Mexico. By the way, those could still be implemented in a month. This is clearly something that the president wants to be able to maintain over time. It's just a question of where we go with Justin Trudeau. That's at 3 p.m. Eastern time. We'll be listening.
Indeed, we will. And we hope you're all listening to our next conversation because it's an important one. Joining us now on Bloomberg TV and radio is Jared Bernstein, of course, used to lead the Council of Economic Advisors under the Biden administration. Jared, welcome back to Balance of Power. Now outside the White House, able to speak a bit more freely, perhaps. When you look at what has been threatened here, let's just focus on Canada, 25% levies, 10% on Chinese goods. What economic impact are you bracing for if this becomes reality?
Well, first of all, great to be with you. And yes, it's nice to have a little more degrees of freedom. I think that economists have been really quite uniform. Analysts across the board have recognized that tariffs get largely passed forward to consumers. So I think there's little question that if these tariffs were to take effect, consumer prices will go up. China, Mexico, I understand Mexico is now on hold, but China, Mexico, and Canada are by far our three largest trading partners, something like 1.5 trillion in imports in last year. That's about maybe 5% of GDP, so that's real money. The supply chains couldn't be more integrated, so this is very much a monkey wrench in terms of inflation and interest rates. We already saw a market reaction. You've talked a lot about policy uncertainty, and you guys nailed the exactly right question. Is this all threats for leverage, or is there some real action coming here?
Well, you've been in meetings like these, Jared. I don't know what your thought is on that, but when you consider the countries we're talking about here, like Sean just said, it's not just about raising revenue or exacting some sort of retribution. It's about rebalancing trade. What would Donald Trump need to do to zero out our relationship with Canada? That appears to be the goal here, no?
Yeah. Well, first of all, let me say that I really probably haven't been in meetings like this because one of the things that we put a pretty high priority on was avoiding the kind of policy lurching that we've seen in the past couple of weeks. Now, look, if you do everything yourself from the Oval, and we did executive orders as well, though nothing like what we're seeing in terms of the flurry from Trump, if you do everything yourself, you're going to have a lot more policy lurching. They call it flooding the zone, and I just think it's particularly bad for the uncertainty that we've talked about, and that creates a negative climate for business investment. So I think this is not the kind, if I were at those meetings, I'd be saying, wait a second, let's try to give the world a little more idea about what we're up to here. By the way, if you don't enact the tariffs, you don't get the revenues. So I think it's, they can't talk both about we're using this for leverage and we're going to collect a lot of revenues. In terms of zeroing out, trade balances, I think you're probably right. We know these folks think of the trade deficit as a scorecard, and I just think that's a really big mistake. I mean, we've had full employment economies with large trade deficits and with small trade deficits. That doesn't mean they're 100% wrong, by the way. And in fact, one of the things that they got right before a lot of other people did was to recognize communities and people who've gotten hurt by persistently imbalanced trade. But that doesn't mean you try to zero out trade balances, because that has significant negative effects on prices, interest rates, and supply chains. It means that you make sure that you're running the kind of economy that provides opportunities for everybody, including those in import competing sectors.
Well, and when we consider those that the president thinks have been hurt by our current trade balances, a lot of it, Jared, he continues to speak to, is the manufacturing sector. He thinks that tariffs are a way to protect American manufacturers and to incentivize more production in the U.S. If tariffs are not the right way to go about that, what is?
Well, first of all, let me just underscore the points that were made by the excellent guy you had on before me, who pointed out that these tariffs that we saw in Trump 1 were associated with job losses in manufacturing. I remember vividly the day that Alcoa came right after Trump put on aluminum tariffs. Alcoa, the biggest U.S. aluminum producer, came in and said, can we get an exemption? Why? Because so many of these imports by U.S. companies are inputs, intermediate inputs, and so you're raising the price of production for them. That hurts our sectors. The Trump administration did not lower the trade balance in Trump 1, and they won't do it in Trump 2. So, your question is the right one. How do you increase activity in the manufacturing sector, if that's your goal? And certainly it was part of our goal in the Biden administration. You incentivize investment. This is a lot more carrots than sticks. Our investment agenda, which is ongoing, was pulling in hundreds of billions of private capital to invest in standing up new domestic industries, many of which, by the way, most of which are being built in red or even Trumpian parts of the country. So that's the way that we found to be a lot more successful. I think the record is starting to show that works much better than this approach.
Yeah, it does appear they're going to be drinking the clears up in Canada because they're going after whiskey from Kentucky here, Jared. I just wonder, what are companies supposed to do? If you're Mary Barra, what do you do right now? And by the way, GM has been one of the hardest hit today, even with some of the relief that we've seen since this morning. If you've got a vehicle that's crossing the border multiple times at various stages of assembly, do you have to rewrite your entire business plan?
Well, it was interesting you should raise Mary Barra, because she was quoted in the Journal the other day. I took this to heart. She said, we're putting some of our investment plans on hold until we get a bit more policy certainty. That's not an exact quote, but that's certainly the spirit of what she said. That's a precise point that I think is so important here. Even if you're happy, as I am, to see these Mexican tariffs postponed for a month, the damage is already done in terms of creating an uncertain environment that we know for a fact, empirically has been shown, trade uncertainty of this magnitude is associated with diminished investments. I don't think that these supply chains that you just asked about, where vehicles cross borders, both north and southern borders many times, are going to be reconstructed anytime soon. And look, if this call goes the way it might go at 3 o'clock, they don't need to be. So one thing we need to find out is just how serious the president is about all this.
Jared, as we've been talking, we've been getting some headlines from Raphael Bostic, the president of the Atlanta Fed. And obviously, for the last several years, we haven't been able to have the frank conversations around monetary policy we wish we could have with you. So I ask you this question now. As Bostic says, they're just going to have to watch on tariffs. Do you expect the Federal Reserve is going to look through this?
I think they're going to probably look through any one-time price hits. I think, again, the conversation you just had suggested that when you do put a tariff on it, definitely is a price hit to inflation, but it can be a one-time hit for the level, not an ongoing hit to the growth rate. Where I think they are probably worrying more about than they might be talking about is any kind of damage done to inflationary expectations. I consider anchored inflationary expectations a national economic treasure, in the sense that this was so important in getting inflation back down when the pandemic-induced spike occurred. And so this is something we know that the Fed values dearly. And if price setters, they're the folks who really matter when it comes to inflation expectations, are so thrown by this policy lurching that their expectations of where prices are headed become de-anchored or become unsettled, that's a real risk. So it's one thing to look through relative to the inflation rate, as Raphael was saying. I think that makes sense. It's another to be worried about any type of impact on expectations.
One of these days, we're just going to have Jared come back to talk out of school all about the Fed. That's all we're going to do. Just never happen. Jared Bernstein, great to have you.
That is a great liberation for me these days.
Well, I love that. So take us up on the invite. It's good to see you, Jared. Welcome, as always. Former director, White House Counsel Economic Advisors, the former chair. Interesting take on things here, Kaylee. We'll be waiting to hear on this next phone call at 3 o'clock. The markets seem to be ahead of the curve, though, on deciphering all of this.
Yeah, Mexico's tariffs have been deferred. It does seem traders are hoping the same for Canada and China. We have yet to get official word on that from the president. We'll have more ahead with our political panel right here on Balance of Power on Bloomberg TV and Radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, and NASDAQ all trading lower. Stocks off session lows as President Trump agrees to delay 25% tariffs against Mexico for 1 month. The S&P now down 45 at 59.94, a drop of 0.8%. At one point, the drop in the S&P was approaching 2%. Right now, we've got the Dow down 116, down 0.3. NASDAQ is lower by 1.2%, down 229 points. 10-year at 4.52%, the 2-year 4.24%. Gold up $21 the ounce, 28.19, up 0.8%. And West Texas Intermediate crude now unchanged on the day, 72.54 a barrel. Recapping stocks lower, S&P down 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, Kaylee Lyons and Joe Matthew in Washington. But we've got our eyes on Mexico City, in Ottawa, and Beijing as well today as we try to figure out what exactly is about to happen at midnight tonight, if anything, on the imposition of tariffs on allies and adversaries alike, knowing that President Trump, after speaking with Mexican President Claudia Sheinbaum earlier today, has decided to defer tariffs on Mexico for a month, the exchange there being 10,000 Mexican troops being sent to the border. Canada still is threatened with 25% levies, China with 10%, and a conversation with Justin Trudeau and Donald Trump scheduled for just over an hour and a half from now.
This should be a doozy. I guess you could frame the Sheinbaum call as the perfect call. We'll see if they can duplicate that at 3. But Canada's dealing with a very different deck here than Mexico is. And by the way, has promised retaliatory tariffs, essentially dollar for dollar. We're looking at 25% levies coming from Canada as well. So there's a little bit more of a standoff here with our neighbor to the north as opposed to the south, where we're going to see actual Mexican troops, I guess, along the border here trying to keep fentanyl and illegal immigrants out. That's going to have to be something that is gauged over time, though. The president's given them 1 month.
Well, and the president just gave a lot of time to reporters in the Oval Office answering questions from them, speaking about Canada tariffs in particular, and once again reiterating his desire for Canada to become the 51st state. And I do wonder, short of that, if Canada can't agree to that, what Canada is going to be able to agree to that will satisfy.
It could still be tariff day tomorrow. Let's assemble our political panel for their take on this. Jeannie Shanzano is with us, of course, Bloomberg Politics contributor, Democratic analyst and political science professor at Iona University. And Kaylee, we have Mark Short with us in the flesh today, former chief of staff to former Vice President Mike Pence, of course, Republican strategist. Great to see you both here. Mark, I don't know your thoughts on this, and we noted earlier you were in the building when USMCA was written, when this trade relationship was renegotiated. Does Canada have anything to offer that could turn this around?
Joe, it's hard for me to understand what they can offer because I think, again, as we talked about, the president is invoking IEPA, which is a law in 1977 that granted emergency economic powers to the president. And he's decided that based upon the border crisis to impose this, which you could, I think, make a stretch argument to say it applies to Mexico. How it applies to Canada, I think, is a lot harder. And so I don't know what Canada's card is that they can play here, except that it perhaps is difficult for the president to take this case to court and claim that there is this emergency at the northern border and therefore justifies this extraordinary tariff. So he may also be looking for a way to kind of back out of this now that Mexico's taken out of the equation too.
Well, is that the way you see it, Jeannie? And to what extent do you think that this is about Donald Trump being able to say, look, I threatened them. They gave me concessions. This is what I wanted. I made a deal once again.
Yeah, I mean, I think part of the problem here is the goal is not clear. We are hearing various goals, various goals, rebalance trade, raise revenue, policy objectives like the border and fentanyl. And, I do sort of question when people say that, this agreement, quote unquote, reached with Mexico was somehow a big win. We have Mexican troops at the border. Are you telling me that the president could not negotiate that short of these really draconian tariffs being placed on Mexico and within 48 hours or 24 hours before they go into place, we reach some magical deal? It strikes me very much as what happened with Colombia. And so I am not sure that any of us can judge the success of any of this because the goal is unclear. And I'm surprised a bit because we were told the administration was coming in. It had its ducks in a row. It was going to go full force. It was going to be a precision machine. This has been anything but. It is bumpy. It is muddled. It's unclear. And government ill-executed is bad government. That's Hamilton, and it remains as true today as it was when he wrote it in 1789.
Jeannie and Mark, we're going to be hearing, it appears, from Donald Trump imminently here. I'm not sure what he's going to be talking about here. Is that ready? He's brought the press pool into the Oval Office, and we're just getting this in to our newsroom from the White House live on Bloomberg. Here's the president.
Where's Steve? Steve Woodcock, everybody. Done a great job in the Middle East. Really great. But we'll see how it all turns out. It's complex, but I think he's going to do very well.
Next, we have Mauricio Claver-Carrón to be your special envoy to Latin America, sir.
Okay. Good man.
Thank you, sir. Next, we have retired General Keith Kellogg to be your special envoy.
This is live sound from the Oval Office. President Trump is signing a series of executive orders right now. He's going to be taking questions from reporters after. This is playback from the Oval as we listen together here on Bloomberg.
We got to stop that ridiculous war.
Thank you, sir. Next, we have designation of Rick Grinnell, to be your envoy for special missions.
I sent him to California to turn on the water. We turned it on. It was not easy because we had to go through a lot of environmentalists that are causing a lot of problems. And we have billions of gallons of water. It was on 3 days ago. You probably saw. It should have gotten a lot of press, but it didn't get much. All we're doing is giving Los Angeles and the entire state of California virtually unlimited water, which they could have done 5 years ago, which I told them they should do, but the environmentalists stopped them. And we opened it, and we did it regardless of the state. And now the state seems to be very happy. I spoke with Gavin Newsom, and he's very happy. I almost called him by the other name, my little nickname for him. But I think they're all happy. They have a lot of water in California. Too bad we didn't have it about 2 months ago, right? That was, by the way, that was a big move. We have, I don't know if you saw the pictures that were released of the water pouring down from the Pacific Northwest and Canada and lots of other places. And it's a pretty amazing sight.
Mr. President, Rick Grinnell had a big Friday trip as well.
He had a very big Friday trip. You're right. We'll talk about that. He's a good man, Rick.
Lastly, sir, we have a designation of Mark Burnett as your special envoy to the United Kingdom.
You know, Mark Burnett is. I figure he should be good. He certainly had done a great job. Friend of mine and very talented guy. We have very talented people working for us. I'll hold that one up because Mark gets so much television. We'll hold it up, right? He'll be thrilled to see it. He's going to do a good job.
Thank you, sir. Next, your administration has smashed records for appointing large numbers of highly qualified, capable people at all levels of the federal government. These are 28 sub-cabinet level officials being appointed to a number of different departments and agencies. Some of them are quite important positions like departmental general counsels, but these are people who have been pre-vetted and have received your approval previously.
Very good. Okay.
Thank you, sir. Next, this is an executive order. This charges your Secretary of the Treasury, Scott Bessent, and your Secretary of Commerce, Howard Lutnick, to begin a process that will hopefully result in the creation of an American sovereign wealth fund.
It's a very exciting event. We're going to have a sovereign wealth fund, which we've never had. We have a lot of things that create wealth, and you've seen that over the last 2 weeks. I think we've created more wealth other people have created de-wealth, the people, my predecessors. We're creating a lot of wealth. Scott, maybe you'd like to say something about it, and I'd ask also Howard to say something about it.
Yes, sir. This is very exciting. We're going to stand this thing up within the next 12 months. We're going to monetize the asset side of the U.S. balance sheet for the American people. We're going to put the assets to work, and I think it's going to be very exciting. We're going to study best practices that's done around the world. It'll be a combination of liquid assets, assets that we have in this country as we work to bring them out for the American people.
The extraordinary size and scale of the U.S. government and the business it does with companies should create value for American citizens. If we are going to buy 2 billion COVID vaccines, maybe we should have some warrants and some equity in these companies and have that grow for the help of the American people. So I bring all these things together. I think Scott and I will create an amazing sovereign wealth fund for you, sir.
So other countries have sovereign wealth funds, and they're much smaller countries, and they're not the United States. We have tremendous potential in this country, tremendous. You're seeing that, what's happened just in a short period of time. And as an example, TikTok, we're going to be doing something perhaps with TikTok, and perhaps not. If we make the right deal, we'll do it, otherwise we won't. But I have the right to do that, and we might put that in the sovereign wealth fund, whatever we make, or if we do a partnership with very wealthy people, a lot of options, but we could put that as an example in the fund, and we have a lot of other things that we could put in the fund. And I think in a short period of time, we'd have one of the biggest funds. And you know, some of them are pretty large, I must tell you. Some of like the Saudi Arabia fund is on the large side, but eventually we'll catch it. But we're going to create a lot of wealth for the fund, and I think it's about time that this country had a sovereign wealth fund. And these two gentlemen and some others are going to work with them very closely, and they'll be heading it up, and they're going to do a great job. Two highly respected people that have done unbelievably well in the world, in the real world. So that's a big deal, huh?
Yes, sir. I think it's going to create value and be of great strategic importance.
Mr. President, why is it important for Elon Musk to have access to the payment systems at Treasury?
Well, he's got access only to letting people go that he thinks are no good if we agree with him, and it's only if we agree with him. He's a very talented guy from the standpoint of management and costs, and we put him in charge of seeing what he can do with certain groups and certain numbers. Some of the numbers are horrible, what he's found. Think of it, $100 million on condoms to Hamas, and many other things that are frankly even more ridiculous. And they're finding tremendous waste, really waste more than anything else, I think you could say. Probably fraud and abuse could be added to it, the more standard waste, fraud, and abuse. But they're finding tremendous amounts of really bad things, bad spending. You've been writing about some of it, frankly, and some of the things that they've been doing is just terrible. Elon can't do and won't do anything without our approval, and we'll give him the approval where appropriate. Where not appropriate, we won't. But he reports in, and it's something that he feels very strongly about, and I'm impressed because he's running, obviously, a big company. It has nothing to do with, there's a conflict that we won't let him get near it, but he does have a good natural instinct. He's got a team of very talented people. We're trying to shrink government, and he can probably shrink it as well as anybody else, if not better. Where we think there's a conflict or there's a problem, we won't let him go near it. But he has some very good ideas, and we have a lot of very other talented people also. We're bringing in the most talented people in the world. By the way, we just unrelated, but we have two of the most talented people in the world, the legendary Rupert Murdoch and Larry Ellison. So they are two legends in business, publishing, and probably every other. Rupert is Larry pretty much in a class by himself, right? I mean, although you may have a couple of bucks more, I don't know, but Rupert is in a class by himself. He's an amazing guy, and Larry is Larry. Larry's one of the most serious players anywhere in the world, so it's an honor to have you. This has nothing to do with you people, but they're here, and I thought it would be appropriate. I'm sure you didn't recognize them. They're all going crazy. They say, what are they doing here?
Thank you, sir.
Mr. President, on the tariffs, is there any chance that Canada or China could also get out of the tariffs after you struck a deal with Mexico?
Well, nobody's out with Mexico. We had a great talk with Mexico, and we had President Sheinbaum is a woman. I like her very much. We've had good relationships, but we have to stop fentanyl from coming in, whether I like somebody or not, and we have to stop the illegal aliens from coming in. I think we've lost 200,000 people on average a year for many years, much higher than the 100,000. Could be even closer to 300,000. And they've agreed to put in 10,000 soldiers permanently, like forever, 10,000 soldiers at their side of the border and stop fentanyl and illegal aliens from coming into our country. They have a big incentive to do. Other than that, we've agreed to talk and consider various other things. We haven't agreed on tariffs yet, and maybe we will, maybe we won't. But we have a very good relationship. I also spoke with Prime Minister Trudeau of Canada, and we had a good talk in the morning, but I did ask him a couple of questions, like, you know, banks aren't allowed to do business in Canada. Canada is very tough. Canada is very, you know, we're not treated well by Canada, and we have to be treated well. Banks are not, as an example, allowed. Did you know that banks, American banks, are not allowed to do business in Canada? Can you believe that? And that's one of many things, and we talked about it, and I think we'll win most of the subjects. But for some reason, a lot of things have been very unfair with Canada. I noticed that in the first term. You deal with people, and after a while, you begin to realize, like you learn that Larry Ellison's very tough to do business with, okay? He's a very tough guy. I mean, I'm sure you're shocked to hear that. But Canada is very tough. They're very, very tough to do business with, and we can't let them take advantage of the U.S. They don't take our agricultural product for the most part. They don't take our cars. They make cars, but they basically don't take our cars. And, you know, we don't need, and look, I think we're going to have another good conversation today. We're actually speaking at 3 o'clock again. But we don't need them to make our cars. We don't need them to give us lumber. We don't need them for agricultural products because we have all the agriculture we need. They don't take our agricultural product for the most part, our milk and dairy, etc. A little bit they do, but not much. We take theirs. And as far as cars are concerned, they took in a big percentage, almost 19% of the market. And, you know, I wouldn't mind making our cars in the United States, so we have a problem there. I'd like to make our cars in the U.S. We don't need Canada to make our cars. With that being said, we're going to have another call at 3 o'clock. We had a call this morning. It was a pretty good call, I'd say. So the call with Mexico went very well in the sense that they're very strong now on the border. They're going to put soldiers there. So, actually, they're best military soldiers, and they're going to be at the border, 10,000. That's a lot of soldiers, and they want to protect it also. You know, they don't want people running through Mexico, coming through Mexico to come into our country. So they're going to do that, and then we're going to talk about other things over the next 30 days. We're going to have Scott, Howard, and Marco Rubio, Secretary of State, lead the delegation, and we're going to have a big negotiation with Mexico. I'll be involved too, and President Sheinbaum will be involved to see whether or not we can work something out on the tariffs.
What about China, sir?
China will be speaking to China probably over the next 24 hours.
On fentanyl in China, President Trump.
We don't want fentanyl coming into our country. Now, we had another big thing, speaking of China. China's involved with the Panama Canal. They won't be for long, and that's the way it has to be. Marco just got back, as you know. He's in the process of coming back. I guess he's almost back by now. And he had a very long conversation with the leader of Panama, the respected man, and some others, the entire leadership group. And we're trying to work a deal on the Panama Canal. The Panama Canal was given foolishly years ago it shouldn't have been happened, years ago to Panama by Jimmy Carter and the group. We lost 38,000 people building the Panama Canal, like one of the great wonders of the world. It's the biggest job we've ever built, the biggest project we've ever built in this country, dollar-wise and every other way. 38,000 people died, Americans, all men, just about, laborers and construction people. They went to Panama. The mosquito got them. Between mosquito and snakes, we lost 38,000 people. It was the most expensive project ever built by the United States. The biggest, most expensive project we ever built 110 years ago. If you bring it up to now, it would have been the equivalent of $2 trillion. The most expensive we ever built, and we gave it away for $1, okay? We gave it away essentially for nothing. And we either want it back or we're going to get something very strong, or we're going to take it back. And China will be dealt with. And we didn't give that to China. We gave it to Panama. We shouldn't have given it to Panama. But Panama, as you know, has violated the agreement, totally violated the agreement. So that's in the process right now. But they did have a very good meeting with the head of Panama.
In addition to tariffs on China, could you say your current thinking about whether China should be forced to pay reparations both for fentanyl deaths and the million COVID
No, I haven't talked about that, but they do have tariffs. Honestly, nobody, the amount of money that was lost and most importantly, the lives lost because of COVID is not something that anybody could ever even imagine. It's probably $60 trillion, and all the countries in the world don't have $60 trillion. The amount of death and the amount of destruction and the amount of money lost is probably $60 trillion. I had it figured by people about 3 months ago. It figured out. Nobody knows what the real number is, but it's almost an infinite number, the damage done. But I have not discussed that. What I have discussed is we'll have some good meetings with China. We have meetings planned, and we'll see what happens. But that was just an opening salvo. If we can't make a deal with China, then the tariffs will be very, very substantial. Okay, I'm going to sign this one.
Sir, this is, you've obviously made making America healthy again a key priority of this administration. A key component of that is obviously heart health. This is a ceremonial proclamation declaring the month of February to be National Heart Month.
I hear we're doing very well with nominations. We'll see, but it looks like we're doing very well with nominations.
Mr. President, have you been involved with calling senators who had some concerns about Tulsi Gabbard?
Yes.
RFK?
Yeah, I've gotten great response. And they want to do what's right, and we've had a good response. I think we'll do well. We have great people like this. We have great people coming in. I'd like to say the best ever recruited for government. I think we have the finest people ever recruited for government.
Will it take an active Congress?
And you know what? You're starting to see that because we've done more in 2 weeks than Biden's done in 4, 5 years, 6 years. They could be here between him and Obama. You add it up, okay? We've done more in 2 weeks than they've done in 12 years.
Will it take an active Congress to do away with USAID, or do you believe you have?
I don't know. I don't think so. Not when it comes to fraud. If there's fraud, these people are lunatics. And if it comes to fraud, you wouldn't have an active Congress. And I'm not sure that you would anyway. But we just want to do the right thing. It's something that should have been done a long time ago. It went crazy during the Biden administration. They went totally crazy what they were doing. And the money they were giving to people that shouldn't be getting it, and to agencies and others that shouldn't be getting it, was a shame. So tremendous fraud. But we'll be doing a report. We'll be giving you that report at the appropriate time.
You know, in the first term, though, USAID was something that you liked in some respects.
I love the concept of it.
That's a program.
Sure. I love the concept, but they turn out to be radical left lunatics. And the concept of it is good, but it's all about the people.
Mr. President, you said you also want to impose tariffs on the EU.
Well, we have massive deficits with the European Union, massive, like $350 billion, if you can believe it. They don't take our farm product. They don't take our cars. They don't take almost anything, but we take their cars. We have millions of cars coming in, BMW and Mercedes-Benz and Volkswagen and just so many different cars, and we don't do anything about that. And we don't charge them tariffs. They make it impossible to sell cars in the European Union. They make it very difficult, agricultural product. They actually don't take it. And they have a lot of excuses. Some of them are the pesticides and the different chemicals used. And Bobby Kennedy actually is looking at that very, very seriously, because maybe it's not necessary to use all of that. You know, we want to be the healthiest country, and we're not. We spend more money on food than anybody else in terms of its creation, but we're not the healthiest country. So maybe there is something to the fact that we shouldn't be using so much chemical, and maybe that'll stop. But Bobby Kennedy is the one, because he is not a believer in all of the things we have done, and neither are the Europeans. So we'll see what happens. But they use it as an excuse not to buy our product. And I asked a couple of the leaders, I don't want to use names, but how many Chevrolets or Fords do you see in the middle of Munich? And the answer is none, because they don't take any cars. They don't take anything. So the European has abused the United States for years, and they can't do that. And they want to make a deal. Let me tell you, in all cases, they all want to make deals. There's nobody that doesn't want to make deals. They've been abusers, and they want to make deals. So we'll see about that. But we'll have, I think, some very fair. All we want is a fair deal. And, you know, there's a word, reciprocal. I'd go right now, reciprocal tariffs on everybody, because many of the countries that you feel so horrible about, the way they're being treated by Trump, you're saying, oh, President Trump is so terrible to them. Well, they charge us tariffs. European Union has a VAT tax, which is through the roof, okay? It's a similar thing, similar to a tariff. It's a VAT. And they have it, and it's numbers like you wouldn't believe. And Canada, I told you about the banks, and I told you they charge us. And people don't say that. They don't like to say it. Just like they don't like to say that I opened up the water for California. It's a great thing. It's too bad they didn't do it themselves. I had to do it, and it was not easy. We did it a very rough way, and I didn't like to do it a rough way. We shouldn't have to do it a rough way. But a lot of these countries that we're talking about, you know, they're so-called allies, but they don't treat us well. And just like I got $420 billion, and now it's actually over $600 billion, the Secretary General of NATO came in 2 weeks ago, and he said it was a miracle when Trump came in, when President Trump came into NATO. He said it was $636 billion by saying to them, no, you have to pay. And if you don't pay, we're not going to be there for you. You know, somebody has to say it, and they paid. And it was a large amount of money. And one of the problems we have with the Russia-Ukraine situation is that we want to see some equalization, because we're in for close to $300 billion, and they're in for $200 billion less. Why are they in for less? Because Biden never asked them for money. He never said, you got to pay. He never did. All he did is hand out money. So we're talking with them right now, and we're actually working some deals right now, so we have some guarantees and some other things to keep that whole situation to go, really going. I mean, going. We're telling Ukraine they have very valuable rare earth. We want what we put up to go in terms of a guarantee. We want a guarantee. We're handing them money hand over fist. We're giving them equipment. European is not keeping up with us. They should equalize. And look, we have an ocean in between. They don't. It's more important for them than it is for us. But they're way below us in terms of money. And they should be paying at least equal. They should really be paying much more than us. But let's say equal to us. And they're billions and billions of dollars below. So we're looking to do a deal with Ukraine where they're going to secure what we're giving them with their rare earth and other things.
Mr. President, in terms of the deal with Mexico this morning, was that partially related to the market reaction and a criticism from Mr. Murdoch's own newspaper? He called it the dumbest trade war on the on the editorial page on Saturday.
I'm going to have to talk to him.
There's market reaction or concern about.
I've been right over the Wall Street Journal many times, I will tell you that. I don't agree with him on some things. No, it's not only is it not them, you're going to see. Every single one of those countries is dying to make a deal. You know why? Because they're ripping us off really badly. And the United States is tired of being just being ripped off. And that's why we have $36 trillion in debt. We have it for a reason, because we make bad deals with everybody. And we don't allow that anymore. So the Wall Street Journal is wrong, because very simply, every single country that you're writing about right now is dying to make a deal, because the deals they have right now are so good and so good for them and so profitable for them. You didn't know that Canada didn't allow our banks. You didn't know all of these different things. And I think in the end, you're going to see that either very, very substantial tariffs are going to be paid by them, or they're going to make some kind of a deal.
Sorry, or did Mexican President Sheinbaum?
Did what?
Did you blink this morning?
There was no blinking. No, she's a wonderful woman, but she did agree to 10,000 soldiers on the border. I would say that's a lot. Would you say that's pretty good? 10,000 soldiers on the border?
Sir,
and the 10,000 soldiers are going to keep illegal aliens out, and they're going to keep them out, seriously out, and otherwise they're going to have a big penalty. Mexico's going to be penalized. They're not going to come through Mexico anymore, and they're not going to let the fentanyl come in from China. And China hopefully is going to stop sending us fentanyl. And if they're not, the tariffs are going to go substantially higher.
Sir, just to clarify, when you said about Ukraine earlier, the rare earths, is that something you want them to give the rare earths to the United States?
Yeah.
Okay.
I want to have security of rare earth. We're putting in hundreds of billions of dollars. They have great rare earth, and I want security of the rare earth. And they're willing to do it.
Sir, you mentioned earlier that on Canada, when you talk to Justin Trudeau again, is there anything he can give you at 3 p.m. when you talk again to also secure a pause, like you said, with Mexico?
I don't know. We have big deficits with Canada, like we do with all countries. I mean, I look at some of the deals made, I say, who the hell made these deals are so bad? But with Canada, I have a talk with him, and you maybe know or maybe not. We're going to meet again or talk again at 3 o'clock. Right after my next meeting, and we'll see what happens. I can't tell you what's going to happen.
You mentioned that he could agree to change your mind on the tariffs?
Well, we can always, look, what I'd like to see, Canada become our 51st state. We give them protection, military protection. We don't need them to build our cars. I'd rather see Detroit or South Carolina or any one of our Tennessee, any one of our states build the cars. They could do it very easily. We don't need them for the cars. We don't need them for lumber. We don't need them for anything. We don't need them for energy. We have more energy than they do. We don't need them for energy. So I say, why are we doing this? Why are we willing to lose between $100 billion and $200 billion a year? We don't need them. As a state, it's different. As a state, it's much different. And there are no tariffs. So I'd love to see that, but some people say that would be a long shot. If people wanted to play the game right, it would be 100% certain that they'd become a state. But a lot of people don't like to play the game because they don't have a threshold of pain. And there would be some pain, but not a lot. The pain would be really there. So we're going to meet again by phone at 3 o'clock, and we'll let you know.
On Israel, President Trump, you're prepared to meet with Benjamin Netanyahu.
Coming in tomorrow.
Yes, you've mentioned in the past you're concerned about Israel being too small geographically. Would you support annexation of parts small geographically? Would you support annexation of parts of the West Bank by Israel?
Well, I'm not going to talk about that. It certainly is a small. It's a small country in terms of land. See this pen, this wonderful pen? My desk is the Middle East, and this pen, the top of the pen, that's Israel. That's not good, right? You know, that's a pretty big difference. I use that as an analogy. It's pretty accurate, actually. It's a pretty small piece of land, and it's amazing that they've been able to do what they've been able to do when you think about it. There's a lot of good, smart brain power, but it is a very small piece of land, no question about it.
Mr. President, you said earlier that Elon Musk is doing everything with your say-so. So is there everything that he has done thus far, going through all the agencies, shutting off access, getting access to federal payments,
For the most part, yeah. If we, if there was something that didn't have my okay, I'd let you know about it really fast.
And you said there's some areas where you wouldn't let him work because he has conflicts of interest.
If there was a no, I haven't seen that, and he would know not to do it. So we haven't had that yet. But if there was a conflict, we would let him work in that area.
Earlier you said in regard to Panama that they were going to make a deal where the U.S. is going to take it. How long do they have to make that sort of deal, and are you still leaving on the table?
We're going to meet with Panama on Friday at about 3:30 in the afternoon by phone, and maybe there'll be some representatives at, here or there. But we're going to be talking to Panama on Friday, essentially. And they've agreed to certain things, but I'm not happy with it.
On the Middle East, Mr. President, if I may, do you still have doubts that the ceasefire will hold?
On what?
On the Middle East, do you think the ceasefire will hold?
I have no assurances that it'll hold. I mean, I've seen people brutalized. Nobody's ever seen anything like it. No, I have no guarantees that the peace is going to hold. Steve, you might want to say something about that. Steve Woodcock.
It's holding so far. So, and we're certainly hopeful, and that's the president's direction. Get the hostages out, save lives, and come to hopefully a peaceful settlement of it all. So far it's holding.
Mr. President, on a different topic, questionnaires have been going out to FBI agents across the country who were involved potentially in the investigation. Do you believe anyone involved at any level should be fired, sir?
Well, I think the FBI was a very corrupt institution, and I'm a victim of it in a true sense. I was able to beat it, but other people have been treated horribly. I think the FBI had a great reputation. I think its reputation was really damaged badly, as is DOJ. Look at what they've done in terms of weaponization. Look at what they've done to a political opponent. Probably got me elected by what they did. Or I think I was doing well anyway, but they might have got me elected. But you know what? We have to have pristine, beautiful, perfect law enforcement. And what we want to do, and Cash is the one to do it. He's the one guy that is going to do it. We have to bring the reputation of the FBI. We have to bring the fact of the FBI back to what it could be. Not even to what it was, even better than it ever was. Because who would have thought that the FBI could have been corrupted like they were corrupted? Who would have thought that would have happened? Who would have thought they would have been used to go after, political opponents, essentially, but me being the number one, and so many other things beyond that. And they've been hurt very badly, and we'll see what happens. But Cash is the one to do it, and I hear he's doing very well. Cash will straighten it out. We have great confidence that we can make the FBI great again. Okay, one or two more and we'll be done.
Tulsi Gabbard's nomination is...
Say it?
Tulsi Gabbard.
Yeah, I think Tulsi's going to be doing okay. I'm not sure. I can't guarantee anything, but she's liked by so many people, especially people in the military and law enforcement.
She has a little bit of trouble with some senators over her thoughts on Edward Snowden. I know Snowden, you've mentioned in the past you're thinking about pardoning him. Are you still, and what do you think about that?
No, I don't talk about it right now. I just, people feel very differently. Some people think he should be pardoned, and some people think it would be a terrible thing to do. But I don't get involved in that.
Mr. President, what are you discussing with Mr. Murdoch and Mr. Ellison?
Just respect. I have great respect for Rupert Murdoch. I disagree with him a lot of times with the Wall Street Journal, but that's all right. We've disagreed before, and I'm sure they didn't have any idea what they were talking about, because already you see what's happening. Look at Colombia. Look at what happened with that. Everybody said that with Colombia it was going to be a disaster. In one hour, everything was settled. You know why? Tariffs. Without tariffs, they wouldn't have been the same way. They would not have treated me the way they treated me, which was extremely nicely. And I don't want to use countries, I don't want to use names, but tariffs are very powerful, both economically and in getting everything else you want. Tariffs for us, nobody can compete with us because we're the pot of gold. But if we don't keep winning and keep doing well, we won't be the pot of gold, and then tariffs won't be so good for us. But when you're the pot of gold, the tariffs are very good. They're very powerful. And they're going to make our country very rich again. Thank you very much, everybody.
Thank you, guys.
I don't know. Thank you, guys. How is the market doing?
President Donald Trump speaking with reporters from the Oval Office at the White House for more than half an hour on a number of subjects, including citing a number of executive orders, one that would create a sovereign wealth fund in the United States, but importantly fielding a number of questions on tariffs specifically, after earlier in the day having reached an agreement with the president of Mexico to defer a 25% tariff being placed on all Mexican imports for a month in exchange for 10,000 troops being sent to the border with the U.S. The question, as we heard the president talking about there, is whether or not his conversations with China and Canada that he says will take place this afternoon in the case of Justin Trudeau, or with China over the next 24 hours, can also yield an agreement to have those tariffs deferred.
That's right. A la Colombia. We'll see what happens with a 3 p.m. call with Prime Minister Justin Trudeau. We'll be following that closely here. Really interesting, though, just to get a peek behind the curtain in the Oval Office. Once again, someone who's only been there for 2 weeks. Scott Bessent speaking, Howard Lutnick speaking, Steve Witkoff from off camera. Strangely, Rupert Murdoch in the room to witness all of that today as well, Kaylee.
Yeah, and while we've witnessed it all and listened to it here on Balance of Power on Bloomberg TV and radio, we want to get a bit more reaction now from someone who does have thoughts on trade. The chair of the Trade Subcommittee of the House Ways and Means Committee is joining us now, Republican Congressman Adrian Smith of Nebraska, here with us on Bloomberg. Congressman, thank you so much for your time. You've obviously had praise today for the agreement that Donald Trump was able to strike with Mexico specifically on fentanyl. But when you look at a country like Canada, which only, according to Customs and Border Protection, had 43 pounds of fentanyl crossing the northern border last year compared to 21,000 pounds in the case of what was coming from Mexico, do you really see these things as equal? What will it take for Canada to defer tariffs in the same way Mexico was able to?
I think there are some different dynamics, certainly, but I think the president's posture right now is one that he explains even before he was elected. He wanted to put people on notice. He's followed through with that. We are seeing some positive results, and I think that there's some leveling of the playing field in terms of trade that creates many opportunities, hopefully on the horizon.
Well, Congressman, we appreciate your being generous with your time and waiting through the Oval Office conversation here. The difference as well between Canada and Mexico, though, is that there are retaliatory tariffs in store. 25% Canada is looking at, in fact, goods from a number of red states. I'm sure you've looked through these. Whiskey from Kentucky, oranges from Florida, appliances from South Carolina, and Harley-Davidson motorcycles from Pennsylvania. I don't know if we go red there. I guess for the sake of this conversation, we'll go with it. What would be the impact of these levies on our economy?
Well, the tariffs and the responses, I mean, those speak for themselves. I think that there is a better understanding now of the seriousness that this administration is taking trade and the security of our border. The previous administration, wide open border, totally unengaged on trade. And that sets up this scenario that we are seeing. And I think it's important that President Trump is empowered to make a good negotiation. And I certainly, see, the dynamics of tariffs. I understand that. I think the American people understand that as well. And the American people also know that we need to see more action, and they are seeing that.
Well, if this is all about negotiation for President Trump, what was wrong with the deal he negotiated during his first term? What's wrong with the USMCA?
Well, we saw Mexico flagrantly violate USMCA on biotech white corn, for example. Now, it so happens that, that my district is a big producer of that corn, but the world is watching. The world watched Mexico give us a heads up on this well in advance, and Joe Biden never said a word about it in 4 years. That's obviously not Donald Trump's style, and I'm glad, because I think our country is stronger with a president who speaks up and speaks out, especially when our trading partners, Mexico had just agreed to USMCA and then had such a flagrant violation. It took us a long time, but we did win that dispute resolution. But it was lost time, and time is money.
The White House this morning was framing this as a drug war, not a trade war, Congressman. I don't know if you see it that way, but with that said, and based on what Kayleigh was mentioning, 43 pounds versus 21,000 pounds of fentanyl crossing the northern border versus the southern border, this could be cleaned up real quick, right? They get on the phone at 3 o'clock. Is this all over before the close of business?
I think there are opportunities to correct this. We know that if the southern border, if we get cooperation on the southern border, it's likely to go to the northern border if we don't get the cooperation that we need. We need, quite honestly, we need more cooperation as it relates to immigration from state and local governments, say the state of California and the sanctuary city dynamics that exist across the country. We need full cooperation there, and certainly we need cooperation from Canada and Mexico.
Mr. Chairman, we just have a minute left, but if this is about extracting cooperation and concessions from allies, is it not then about raising revenue? Because you and the rest of your colleagues on the Ways and Means Committee in the House are about to try to push through a tax package with a lot of cuts, and Donald Trump says tariffs are supposed to play a role in offsetting that.
Well, we're going to have discussions about revenue and various opportunities to save taxpayer dollars across the budget. We need to have these conversations. We've needed to have those for some time. We saw record spending under President Biden that triggered inflation. I think it's very important that we move forward with policies that bring down the cost of products for consumers. I think the administration understands this and sees this as a priority as well.
Congressman, it's great to have you back, certainly at a moment like this. He chairs the Trade Subcommittee in the House. Congressman Adrian Smith, Republican from Nebraska. We thank you for the insights. I'm Joe Matthew alongside Kayleigh Lyons in Washington. We'll meet you back here on the late edition of Balance of Power. We'll end this extended edition right now, Kayleigh, and headed back to New York. Tim and Carol standing by on Bloomberg Business Week, guys.
All right, Joe, Kelly, thank you so much. And great insight in terms of what we just heard from President Trump from the Oval Office. A very good afternoon, everyone. Live on radio, TV, YouTube, and Bloomberg Originals. Carol Massar along with Tim Stanovic live here on Business Week. And man, what a first trading day of February, Tim, because we've kind of been all over the map.
Yeah, fair to call this a volatile one. In fact, the Dow is almost in positive territory right now, down less than 0.1%. All thanks to the imposition of tariffs and news around potentially delaying tariffs in Mexico against the U.S. largest trading partners. And then, Carol, we're just getting news fast and furious with what to expect, tomorrow and over the next month.
It's kind of crazy, guys. In the newsroom, we're all like, oh, did you get that headline? Did you get the headline? Just to keep on top of it. So we're going to get into, certainly over the next 1 hour, really the next 3 hours, what tariffs could mean for the U.S. economy, what they could mean for U.S. investors. We've got one hospitality CEO to weigh in really on how tariffs could impact his business. And then we're going to take a kind of a deeper look at what's going on in the U.S. government.
Yeah, the other stuff, Elon and his Doge team halting payments to U.S. contractors, and more. Also, Carol, the power of the executive branch and the president really being put to the test in these first 2 weeks of this second Trump administration.
All right, folks, lots coming your way in the next 60 minutes. Let's get, though, to the trade. As we said, we are well off our worst levels of the session. In fact, we're pretty much near our highs of the session. The back and forth about the imposition of tariffs against the United States' three main trading partners, and then dialing back against Mexico, at least for 1 month. There's a lot going on. So let's get to it with Gina Martin-Adams. She is Bloomberg Intelligence Chief U.S. Equity Strategist, back with us in studio. We talked with you about it last week, kind of, expectations around this. It's a lot of back and forth. How do you figure out what this means longer term, or can we not yet until we get more details on how long these tariffs might stay around?
I think there's one key thing that we know, and that is we should expect more volatility. That's the only thing that we know with 100% certainty is that we are in for a much more volatile year as a reflection of a lot of different things that started at the beginning of this year, but certainly tariff policy, trade policy at large, fiscal policy, and a lot of movement in fiscal policy decision making is going to contribute some degree of volatility to the index. Now, how do you invest around the likelihood or unlikelihood of tariffs and the kind of back and forth in tariffs? Our work would suggest you just stay out of it by hugging the sectors that are working best and the sectors that are less exposed to tariffs. So that are things like financials. Financials aren't going to pay tariffs, right? They aren't transmitting goods back and forth across borders. Even if they do service the Canadian economy or the Canadian banks service the U.S. economy, they're not going to get wrapped up in the immediate effects or the first round effects of tariffs. And financials have very strong backing in our sector rotation model. Healthcare is another area that's largely domestically focused. We'll see if tariffs are implemented on the European Union, which could end up sort of picking away at healthcare performance as well. But that's another area where you have limited risk of tariff activity. Real estate is another. So you can avoid a lot of the risk inside equity investing as well until the dust settles and you get a much clearer picture as to what the economic implications of this are. But you're just going to experience a lot of back and forth volatility for the stocks that are most exposed as we grapple with are we, aren't we, will they, won't they, and that's not going to end anytime soon.
Given what we saw during the first Trump administration, how do we think U.S. companies and companies around the world will absorb these tariffs?
So I think that most of what's going to happen, it's key to remind folks that while tariffs are targeted at economies, companies pay the tariffs, and in particular, U.S. companies that are incredibly globalized, very multinational, and lean on manufacturing facilities, distribution facilities to source a lot of their product from the rest of the world will be the primary targets of tariffs. Let's not forget that ultimately part of the tariff policy is intentionally designed to get U.S. companies to relocate, reshore facilities. And so this is the pressure that they're going to feel. How much pressure it takes is still up for debate, but the U.S. companies will pay it. We saw this in 2018, where there was an equivalent operating margin decline for U.S. companies exposed as well as to global companies exposed to the U.S. economy. So ultimately, it's the companies that operate and sell to the U.S. that will have to pay the tariff costs, and the companies across the spectrum are importers of product that will get wrapped up in tariffs.
It also makes you wonder about these global companies, non-U.S. companies that have invested in the U.S. or nearshoring, be it Canada or Mexico, so that they have closer access to the U.S. market. Ultimately, you wonder how they react and whether or not that starts to go away. I mean, that's another factor of all of this.
And will they ultimately then reshore into the United States, or will they just pull back and look for other trading partners and other revenue destinations around the world is a big question. Because how much can they really afford to relocate a plant inside the United States? Presumably, if that were, if they were able to do so, they would have done so in the reshoring efforts post-COVID when interest rates were at zero. You know, we were certainly struggling economically. There was a big incentive to reinvest inside the United States. They didn't. They invested in either Canada or Mexico in these specific instances. There was probably a reason for that. And they'll have to go back and examine those reasons if these tariff wars continue.
Can I ask you, small caps, mid caps, is this supposed to be like a good thing then for them if we're worried about those with, you know, exposure to having to import stuff and their costs?
Well, if you look at the month of January, mid caps actually outperformed both small caps and mid caps, small caps and large caps. And I think the vast majority of that was because of financials outperforming. There's a lot of financials exposure in the mid cap index. Some of those were fallen angels from the S&P and the crisis that we had in large caps. But nonetheless, I do think that mid caps have shown to be an interesting area of opportunity so far this year. I would be remiss, though, to suggest that small caps and mid caps are going to avoid this pressure as well. They also import products. They also are somewhat more globalized than they had been, 20, 30 years ago, without a doubt. They're big public entities. They will probably have less risk than large caps on a relative basis, but there will be some cost component that they'll feel as well.
Has your view shifted on global equities at all throughout the last few days?
Not necessarily. I think that there is still a lot of opportunity in global equities from a relative valuation perspective. Expectations are very, very low globally, as opposed to in the U.S., where expectations, at least prior to the DeepSeek announcement and the tariff announcements, were very high. So you have a relative opportunity in sentiment that's reflected in valuations. We're just looking for that catalyst for growth to emerge globally, and we have not yet seen that in many economies around the world. So you've got to see some sort of earnings catalyst or fundamental catalyst emerge.
Do potential tariffs on European economies threaten a catalyst?
They could. I think that Europe has been preparing for potential tariffs for months. So we may actually ultimately see some relief on the idea that we know what those tariffs are. And they ultimately could be impactful, certainly to the automotive sector, to the healthcare segment. Across the board, any goods producers in Europe are potentially at risk, but we don't have a lot of visibility as to what the president wants to do with respect to Europe. So that uncertainty is still outstanding. I think resolution is always a good thing. We've definitely been selling the rumor of tariffs. Maybe we ultimately buy the news if the news is a little bit less than rumored.
One thing I want to ask you, Gina, is based on what we are seeing from U.S. earnings, how much pain can U.S. companies deal with before we start to see pullbacks in CapEx, pullbacks in buybacks, we start to see job cuts, et cetera, in order to preserve their margins and kind of keep their investors happy?
So far, I think that we're a ways from that. If there's a big risk that I would point to in the near term that could really erode the earnings outlook, it probably is currency. And that lack of growth in global markets and sort of somewhat stagnant U.S. economic conditions. As much as manufacturing did finally poke its head into expansionary territory as of this morning's release, consumer sentiment has only been deteriorating. So you've got a lot of offsets.
Even though
in the
consumers
US
have been
economy.
spending, sentiment's not great.
Yeah, sentiment's pretty bad and is a little bit of a risk. Interest rates are still quite a bit higher than they were several years ago, even with the Fed's easing campaign of 2024. So there's still a lot of uncertainty in the U.S. economy that I think we need to account for. I do think with respect to the U.S. earnings, though, the biggest risk really is tech, media, and telecom, which is 40% of the market cap of the index. That's less a tariff concern and more just, can these companies actually satisfy expectations? How will their CapEx plans change now that we have the knowledge that DeepSeek exists, that there could be efficiency opportunities? Will their CapEx really be as strong as many people had anticipated? Can we start to see some real productivity improvements from AI?
It's like, what is it about the beginning of a year, right? I think about when AI, right? Like 2 years ago when all of a sudden we were focused on it so much, and now like this year, the early part, we're now questioning the original assumptions and moving on. A lot going on. Thank you, as always. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence. Tim, we know a lot of is really coming at investors on this Monday. A lot of the news, obviously, out of Washington.
Yeah, as we just talked about. So now let's get more on the policies and changes that are happening and what could happen in Washington, D.C., including actions by Elon Musk and his Doge team of government efficiency enforcers, shutting down some payments to federal contractors, suggesting that the world's richest man may have access to sensitive systems used at the Treasury Department. With us in the Bloomberg News Washington, D.C. Bureau is Bloomberg News senior White House and politics correspondent Gregory Cordy. Gregory, good to have you with us. What did we find out over the weekend about the access that the Doge team was given when it comes to certain parts of the Treasury?
Yeah, it was a confusing weekend in terms of tariffs. It was a confusing weekend in terms of this this Doge effort by Elon Musk to root out inefficiencies in the federal government. And really, there was news on a couple of different fronts. One is that Musk was tweeting all weekend saying that he was rapidly shutting down improper payments in the federal government, that he was rooting out corruption and waste in real time. He was posting screenshots of purported payments to certain federal contractors. All of this giving the impression that he had his finger on the button of which contractors were getting paid and not paid. The other front was on the U.S. Agency for International Development. We can talk about that as a separate thing, but where essentially Musk and his Doge teams have shut down an entire federal agency over the weekend. Now, President Trump was just in the Oval Office speaking to reporters and said, look, Musk does have visibility into these sensitive Treasury systems that track payments, but he himself cannot stop any payment to any employee, contractor, beneficiary, taxpayer, et cetera. That he can flag things, but ultimately the decision is the president's, or presumably the Secretary of the Treasury, Scott Bessent, to actually stop a payment if they agree with Musk that it's improper.
All right, so Gregory, a little bit later on this hour, we're going to be talking to someone who from what we've heard so far, is not getting payments anymore from the government. So should we assume then anyone who is not, whether it's a U.S. Government contractor, that the Treasury Secretary or the president has signed off on it?
I think if they're getting paid, then
no. If they're not getting those payments, should we assume then that the Treasury Secretary or the President has agreed to that?
Let's take a step back and kind of talk about how this whole federal payment system works, because it's up to the agencies, each of the different cabinet departments and agencies, to figure out who they're contracting with, who their employees are, who gets to be paid, and then they send these payments to the Treasury Department in bulk for processing and ultimate payment. So it's up to the agencies to decide whether they have the appropriations to Congress. These are lawful contracts. And Treasury's always maintained that, like, look, we're just the checkbook. We process payments. We make sure the money gets from one account to another. But it's not really our job, with the exception of certain entities that are on the do not pay list. Obviously, terrorism, the terrorist groups, people who have defrauded the federal government in the past. They do monitor for that kind of stuff, but it's really up to the agencies to decide who gets paid. So if somebody's not getting paid, it's probably because the agency that they have a contract with or a relationship with has decided to turn off the spigot. And that's where USAID comes in, is that these DOGE teams are going into these other agencies and turning off the spigot there. They just don't have direct access to do that from the Treasury Department sort of master payment control center.
Gregory, the term is in the name, contractors. These people do work on a contract basis, oftentimes because of agreements. Is there an issue in the courts with this?
Oh, I think we're going to see a lot of litigation. We already have with the contractors, but also public interest groups, advocacy groups, saying that DOGE is exceeding any sort of legal authority that the president's allowed to give to essentially a private citizen who has been now sort of recruited into the executive branch to make these decisions. Whether or not he's actually pushing the button or not, he clearly has a huge sway within the executive branch. And you're right, I think it would obviously depend on the nature of the contract, what language there is, what provisions there are for one party or the other to cancel that contract on short notice. But all of that is implicated by these pauses that the president has put on contracts, on grants. The grant freeze was unfrozen after about 24, 48 hours. But this is a battle over spending that's going to be fought from agency to agency and contractor to contractor throughout the federal government over the next weeks and months.
Help me understand, though, right? I mean, this is funding, this is money that has come into the government from taxes. Like, who has determined how this money is spent? Is it congressionally approved? I'm just trying to understand, in other words, who has signed off on this before in terms of whether it's aid to different groups, whether it's, government contractors, that process, and then what is ultimately the determining factor by the Trump team or by Elon Musk and the DOGE team in terms of who continues to get paid and who doesn't? Do we know anything about the criteria?
First of all, there's two major goalposts here in terms of when you're talking about federal spending. One is called the Anti-Deficiency Act, which says that the government can't spend any more than Congress allocates to it. And then there's another law called the Anti-Impoundment Act, which says the government does have to spend what Congress does tell them they need to spend money on. Within that, there's still a lot of discretion by the executive branch over who they contract it with and what the terms of those contracts are. So there's some contracts that Congress says explicitly, this government, there are formula grants, for example, that go to state, local governments based on a formula. The president doesn't have any discretion on who gets those grants. He's tried, he's lost that in battles over, say, sanctuary cities in the past. But he does have discretion over other contracts and who he wants to do business with, and that's sort of what he's fighting on. But there is this lingering battle over that Anti-Impoundment Act, where at some point the president has promised to test this issue as a constitutional matter, to say just because Congress tells me I have to spend this money doesn't mean that I have to, and he's going to start withholding vast payments for vast sectors of the government based on policy disagreements that he has with the Congress.
Gregory, how much money are we talking here? Because, we know that of the federal budget, 21% goes to Social Security, 15% to national defense, 14% to health, 13% just to net interest, 13% to Medicare. As you move further and further down the table, that percentage and the dollar amount certainly do get smaller. How much money are we talking about here?
I don't have an exact number on it in terms of total contracting. I do know that over the past decades, as society has become more complicated, as governments can become more complicated, the contracting sector in the federal government has increased immeasurably, especially in Pentagon contracts, right? Weapons systems, but also IT systems. There are entire towns in the Washington, D.C. metropolitan area that are built on federal contracting. So it's a huge sector, and there's trillions of dollars at stake. And so, yeah, these are going to be, at some point the rubber's going to hit the road where it's not just cutting the waste, fraud, and abuse, but decisions are going to have to be made about actual government services that are provided to people.
Last question. There's a lot of news coming out of the government, and it feels like it's coming from a lot of different places, especially when it comes to policy, when it comes to changes in, various parts of the government in terms of workers and who might be put on leave, who's letting go, and so on. How difficult is it to kind of keep on top of it or keep track of all of it?
It's a lot. It's a lot, and those of us who covered the Trump administration in the first time around got used to a certain higher metabolism of action out of the White House. We're seeing that again, but I think even more so because we had 4 years of pent-up action by Trump and his allies, who saw themselves as this sort of government in exile for 4 years and have been planning all of these executive orders and this shock and awe that we've seen the first 2 weeks. And it takes, I think, some sorting out of what's real, what's not, which Trump actions are going to have an immediate effect. Take tariffs again, for example. Just knowing what the state of tariffs are from hour to hour can be difficult depending on what conversation Trump has had with what world leader recently. So yeah, it's a lot to keep up on. President Trump likes to keep us on our toes, and we're doing the best we can to keep up.
All right, good stuff. Gregory, thank you so much. Bloomberg News senior White House and politics correspondent Gregory Cordy there in D.C. We're going to talk a little bit more about the tariffs that may be imposed, the impact. We'll get to that in just a moment. But first up, we want to get Tim to a little bit more on the impact of Elon Musk and his Doge team.
Yeah, Musk said he's shutting down payments by the U.S. Department of Health and Human Services to a variety of charities, including our next guest and her organization. We've got with us Krish Vignarajah, president and CEO of Global Refuge. With us from Baltimore. Previously, she served in the Obama White House as policy director for First Lady Michelle Obama and at the State Department as senior advisor under Secretary of State Hillary Clinton and Secretary of State John Kerry. Krish, good to have you here. Just give us some background, some context about the work that you do, the payments you have or have not been getting from the U.S. government, too.
Yeah, appreciate your coverage of this issue. So Global Refuge is one of the nation's largest nonprofits dedicated to serving refugees and immigrants rebuilding their lives here in the U.S. We are a faith-based organization. We've been doing this work for 85 years. Our organization was founded by American Lutherans who were helping German Lutherans who had opposed the Nazi regime during World War II. Our mission has expanded since then, but our work today really focuses on resettling refugees from around the world who go through the U.S. Refugee Admissions Program. They go through extreme vetting in order to arrive. In recent times, that's included about 24,000 Afghan allies who serve shoulder to shoulder with American troops and diplomats. We've also worked with Ukrainians who fled Russia's invasion, as well as Christians and others persecuted for the faith.
All right, so give us some background, too, on the funding that you guys have been getting from the U.S. government, specifically, if you could, and how much of your funding comes, or your budget, if you will, or funding comes from the U.S. government.
Yeah, so we've been a strong partner of the government for decades. The vast majority of our funding does come from government, but we don't make any money off of this work. In fact, we have to bring private resources to make the math work because, these programs are intended to be public-private partnerships. And so, the implications of the stop work order and now the failure to receive any reimbursements for the work that we've already done is paralyzing.
Krish, one thing, though, I think it's good for the American public, and we are so grateful that you're here, but to get an understanding of how much money are we talking about, can you give us even a ballpark of what you get from the U.S. government on a regular basis?
Yeah, so I'll just give you kind of an example of kind of a snapshot of the last month or so. So for work that we did at the end of the year, we have about 20 million that we're waiting for payment from one agency, and about 7 million that we're waiting for payment from another agency.
So that's for 1 month?
It's for a slightly longer period than that at the end of last year.
Okay, so give us an understanding, Krish, about the agreement that you have with the government and sort of if it's a contract, if it's expected, if you have to go and renegotiate every year. How is the money allotted from the government to you, and what sort of guarantee did you think was in place to continue that funding?
Yeah, so when you think about the impact that this is having on social service organizations across the board, it is not limited to the immigration space. So much of the infrastructure of the work that is done is by nonprofits, very much like mine, who do rely on government funding, because obviously these are critical services that go to our citizens, to immigrants that we've legally admitted to the country. And so many organizations are impacted. We are not a contractor of the government in the way that you would think of, some of the consulting firms or the private prisons who get billions of dollars from the government. We know that these are partnerships where, days can change and they can, act and say we are going to no longer require your services. But right now, what we're talking about is funding for work that is under our grant agreement. It's a cooperative agreement for work that was done. There's no, caveat. There's no concern about whether it was covered. It's just a matter of going through the mechanism of reimbursement. Typically, it'll take a day once we've submitted for reimbursements for us to actually receive the funding. Sometimes, for one of our agencies, for the other agency, it can take about a week. But we have received nothing for the last couple weeks.
And Krish, do you guys get funding from other governments beyond the United States?
No, we don't.
Okay. So without this funding, how problematic is it for your organization?
It's hugely problematic. For us, we are talking about how we haven't been able to help our Afghan allies. These are individuals who had gone through every hoop in order to come, because we had made a military promise to them that they were going to risk their lives to protect U.S. troops and that we wouldn't leave them behind to face Taliban retribution. So we've been impacted in the fact that we no longer can serve them, but they can no longer even get off the military base, because the stop work order that we're talking about also affects UN agencies. So they're not even able to get off the military base to travel, even if they were able to afford their own flight to come here to the U.S. So it is paralyzing. We operate across the country. We partner with local nonprofits in the reddest of red states and the bluest of blue states. None of them receive funding because we are not able to receive funding.
Krish, there are those that don't understand why the U.S. government is funding perhaps a group like yours and argue for better uses of the money. I'm playing, just the other side of this, or for not spending any money on a group like yours, and better to maybe cut back on spending when we talk so much about the debt that the government has overall, no matter how small the spending might be against the backdrop of the larger budget deficit. I mean, what do you say to that, the government needs to look at all spending on board when there are perhaps, others might argue, there are people who are living below the poverty line, in the United States. So I'm just saying, how do you address something like that?
Yeah, look, these are the debates we can absolutely have. I just want it to be a fair fight, that it's a fight based on fact rather than fiction. It's been really disconcerting when you hear accusations that we are money laundering or that we are trafficking in children. Our work is centered in protecting children. We know that that is a bipartisan value here in the U.S. And so I think I'd first say, let's absolutely look to make sure that every dollar is being well spent. But I also believe that we are a nation strong enough that we can that we can walk and chew gum. I would argue that our work with refugees is not just the smart thing to do, the right thing to do, it's the smart thing to do. There are national security interests, there are economic interests, there are freedom of religion interests. There's a reason why most organizations are faith-based that do this work. So I think there are a number of reasons for why we do this, but I also think it's important to think about how we have 8.1 million jobs that are unfilled. We have the lowest birth rate since the census has been tracking this issue. Our country needs to have a net immigration of over 1 million immigrants so that we don't see the stagnation that we see in Japan, to keep our competitive edge over countries like China that are also facing the demographic cliff. And so I think we will win this debate if we have it, but I just want to make sure that we are having it on the right terms.
And just real quickly, just 20 seconds here. I mean, Elon Musk wrote on X, without providing any evidence, that the Doge team discovered, among other things, that payment approval officers at Treasury were instructed always to approve payments even to known fraudulent or terrorist groups. I'm just asking, just to be clear, have you had any dealings with a terrorist group?
Absolutely not.
All right. I really appreciate your time. So appreciate it. Krishamara Vignaraja, she is President and CEO of Global Refuge, joining us from Baltimore. Krish, thank you.
Well, those tariff headlines just continue to cross. So let's go back there because, as you know, after weeks of threats, a North American trade war has erupted. Businesses and investors are evaluating in real time the possible fallout, and it is the subject of today's Big Take. Joining us with more from our Washington, D.C. bureau is Bloomberg News senior economics writer Sean Donnan. Check out Sean's story, by the way, and more from Bloomberg The Big Take on the Bloomberg terminal and at bloomberg.com/Big Take. Sean, first of all, it does feel like the story is fast moving. Obviously, things have changed in the last few hours. When we did hear the tariffs on Mexico would be delayed by a month, nothing completely definitive at this point. We do expect the president to have a call with the Canadian Prime Minister a little later this afternoon as well. But take a big step back here and remind everyone the goal of President Trump's tariffs.
Well, look, I think what we have learned over the last few weeks is that President Trump has multiple goals, and they're not necessarily all in agreement with each other when it comes to tariffs. He's talked about tariffs as leverage to try and get a deal or a response from another government. We saw that in the case of Colombia. We've seen that in the case of Mexico, possibly this morning. He's talked about tariffs as a way to rebalance trade. He's talked about tariffs as a way to try and bring manufacturing back to the United States. And perhaps most uniquely in recent months, he's talked about tariffs as a great source of revenue for the U.S. government that can, in some ways, reduce the tax burden of local people in the U.S. Now, we should point out that tariffs are paid by U.S. importers. They're not paid by foreign countries, and those importers often pass the cost of those tariffs through to consumers, i.e. American taxpayers.
Sean, you know, I love in your story, you note Trump's unpredictability is legendary, and depending on what transpires of the next 24 hours, he may still reverse course ahead of the tariffs taking effect at 12:01 a.m. on Tuesday, as he has before. We've already had a little bit of that. So all bets off in terms of all tariffs, or not so fast. I mean, how are you, someone who has done this deep dive, this Bloomberg Big Take, to kind of understand the impact on various sectors, be it auto, be it construction, be it agriculture, what have you, and then ultimately the impact on the overall U.S. economy? How are you thinking about all of that against what we've gotten so far against the White House and from President Trump, too, in terms of moving forward and then maybe pulling back a little bit?
Yeah, look, I've been trying very hard to put this in historical context and also to look at the economic consequences. The first thing is what Donald Trump announced at the weekend is the biggest act of protectionism taken by a U.S. government since 1930 and the Smoot-Hawley